order. As the global economic landscape shifts and straddles, India stands at a critical moment of opportunity, curating policies that build capacity, strengthen institutions, and shape a new model for growth for the world to take notice of and benefit through collaboration. Over the next 2 days, we will hear from the leaders who are driving policy, powering industries and services, and reimagining India's future. And to set the tone for the discussions to follow and to share the vision that anchors this thought-provoking conclave, ladies and gentlemen, please put your hands together and welcome Shri C.S. Shetty, Chairman, State Bank of India, for the inaugural address.
Good afternoon, Honorable Union Minister of Finance and Minister of Corporate Affairs, Srimati Nirmala Sitharamanji, distinguished guests who are present here. Welcome to the 12th edition of SBI Banking and Economics Conclave 2025. Before I get into my points, I would like to profusely thank the Honorable Minister for accepting our invitation, and I felt very glad that this is the only program for which she has come to Mumbai. I think a round of applause for the FM. Thank you, ma'am. We always feel privileged to host you in our Banking and Economics Conclave. And your arrival also had got two important milestones for SBI. One is we have touched $100 billion market capitalization today. And we also launched much awaited IPO for SBI Mutual Fund. I think your arrival definitely had added to our pleasure. The SBI Banking and Economic Conclave, our annual event, enters the 12th edition this year. In its 12-year-long journey, this conclave has brought under one roof diverse viewpoints and opinions from people who truly matter. The event touches upon the contemporary themes and issues that affect the wider economic interests of India and banking sector. The sole objective of this gathering has been to discuss and debate and find solutions to pressing problems facing the country. As organizers, we are proud that the conclave continues to draw enthusiastic interest from policymakers, industry participants, and press and general public, something that keeps us motivated to keep the bar high all the time. The last year's SBI Banking and Economics Conclave was centered around the theme, making aspiration of Viksit Bharat a reality. As we reflect, our journey to Viksit Bharat still continues. However, global economy is now again at crossroads with tariff wars and trade tensions dominating the headlines. Resolution efforts show mixed picture across countries. Amidst this, India, which is also facing similar challenges, has coped well. The GDP growth for FY26 has been revised upwards to 6.6% by IMF. The rationalization of GST rates is expected to further boost the consumption and in the long run may even result in fiscal consolidation. High-frequency indicators point to a revival in urban demand and robust rural demand. Despite some negatives, such as tariff issues in India-US bilateral trade, rare earth supply from China, and brief spell of border flare-up, which culminated with the grand success of Operation Sindoor, India's outlook has only improved since last conclave, with S&P upgrading the sovereign rating to BBB. I must congratulate Honorable FM for the effort which is done over the years to project and present India as a country which requires or which deserves better rating. We believe, ma'am, that BBB itself is not an appropriate rating for India. So India has successfully weathered multiple headwinds and emerged quite resilient. Against this backdrop, Indian banking continues its healthy run in FY26. The entire sector has performed well, with comfortable growth capital and low NPAs. Encouraged by this in FY26, we have seen renewed thrust to financial sector reforms, such as progressive implementation of ECL framework, a possible relook at financing of M&A by Indian banks, risk-based premium framework for deposit insurance, consumer protection, responsible and ethical AI in banking, to name a few. This is sure to put the banking sector on strong footing, modernize the service standards, and support the large objective of Viksit Bharat. This year, the conclave's theme is India's quest for self-reliance in a fragmented world order. You all will agree that uncertainty is the best word that describes 2025. Every month of this year was filled with surprises. All these surprises hint towards a trend where global cooperation is eroding as national interest takes the front stage. Trade, critical minerals, and technology, factors that were once seen as areas of cooperation, are today weaponized to serve national interests at the expense of global rules-based order, as well as we see in the UN, WTO, etc. This fragmentation has natural consequences for banking and finance that run on predictability, rules, and trust. Volatility is order of the day, adversely affecting investment decisions, capital flows, and financial returns. It is this quest to safeguard national interests at all costs in a rapidly changing world where cooperation is wanting. The notion of self-reliance is taking foothold in many countries. In the Indian context, self-reliance has a long history, from the success of Green Revolution in 1960s to capturing the world market in IT-enabled services and pharmaceuticals in 2000. India has achieved self-reliance in many sectors through homegrown solutions. However, with time, notion of self-reliance has widened, and today we talk of self-reliance in defense, critical minerals, AI technologies, social media platforms, payment systems, climate finance, and international settlements, etc. With this in mind, the conclave will be spread over 2 days, starting today. Both days have great mix of thought leaders, industry veterans, and change makers deliberating upon key challenges and the best strategies towards to harness the opportunities associated. Coming to today's proceedings, there will be 4 sessions, the inaugural address by the Honorable Union Minister of Finance and Minister of Corporate Affairs, which will be followed by the CEO panel, discussing leadership in uncertain and disruptive times, roadmap for Indian Inc., followed by keynote address by Sri Tuhin Kanta Pandey, Chairman SEBI. The keynote address will be followed by a special address by Sri M. Nagaraju, Secretary, Department of Financial Services. He would be addressing through the virtual conference. I hope the audience will find these topics riveting and informative, and key takeaways will shape the contours of Brand India in times ahead. Thank you. Jai Hind.
Thank you so much, sir. Our inaugural address this afternoon comes from a leader at the very heart of India's economic and financial decision-making, driving change firsthand. Someone who has steered reforms steadfastly and strengthened fiscal architecture and guided India through these globally uncertain times with clarity and resolve, helping Brand India scale and go places. Ladies and gentlemen, a huge round of applause to welcome Srimati Nirmala Sitharaman, Honorable Union Minister of Finance and Corporate Affairs, Government of India. FM.
Good afternoon, and thank you for inviting me on this occasion of the 12th SBI Banking and Economics Conclave. It's grown in stature and it's also an event which people are looking forward to attend and benefit from the discussions which are held here. So the broad theme of the conclave is realizing the vision of Atmanirbhar Bharat. I think I've said this before, Atmanirbhar Bharat is not an isolationist policy. It's not isolationism. But it is a resilient interdependence, capable of meeting domestic needs and also while integrating with global value chains. So global value chains, of course, today face a kind of challenge in itself. The value chains, in the sense, are themselves going through a disruptive phase. But where we are talking about resilient interdependence, we are also sure that we keep that integrating with global value chains alive. So it envisions an India that designs, produces, and innovates for itself and for the world. So an economy which will be rooted in self-confidence, powered by enterprise, and also guided by compassion. So it is the coming together of these things, the economic strength, the technological capability, and also the social empowerment and environmental responsibility, all aligned with the larger goal of Vikasit Bharat 2047. But I see 5 broad dimensions of Atmanirbhar Bharat. So it's a expansive kind of a landscape that we imagine when we are talking about Atmanirbhar Bharat. But 5 milestones or 5 pegs can be placed so that it is laid on strong footing. Economic self-reliance is the first I would place. So you need to have Atmanirbharta in your economic affairs. Social self-reliance, Samajik Atmanirbharta. Technological self-reliance, strategic self-reliance, and finally environmental, but yet mix of energy sufficiency and so on. So environment not just in the cause of green, but also self-sufficiency in those very critical essentials for growth. So it will be on these 5 pillars that I would be placing my narrative to say what is it that we are thinking in terms of when we are talking of Atmanirbhar Bharat and also reaching Vikasit Bharat by 2047, giving a picture under each of what work has already happened. The call for 2047 Vikasit Bharat may have been just a few years old, but the work towards achieving Vikasit Bharat through an Atmanirbhar route had commenced even from 2014. So even as I lay these 5 pillars before you and talk about Atmanirbharta in those areas, I'll equally place before you what foundational work has happened in order that what we need to do for the next 20 years is going to be built on those foundational work. So when I talk of economic Atmanirbharta, it means the nation's ability to generate its own prosperity, and that too through diversified production, internal value chains and value chain creations, and sustainable wealth creation. So India is a vast and uniquely diverse nation. There is no single model before us for us to copy or to replicate. And therefore what we are going to do is essentially build on those lived in experiences and also the models which will be adaptable for India's own futuristic growth. So it should be shaped by our own realities. And when I therefore say of economic Atmanirbharta, it will definitely mean food security. it'll definitely mean energy security, which will also be a part of what I'm finally talking on, environment related issues. Giving full steam and full energy for MSMEs, because they contribute more than 40% of our economic, let's say the export, also the contribution to GDP through various sectors in which MSMEs are present. And also the labor intensive and traditional strength carrying textiles, and unique for India, underwhelming exploitation which has happened, the area which gives immense potential for employment, and an area which should have been naturally our strength, tourism. So I will look at these broad-based progress in these areas, achieving across these sectors, and here blending traditional sectors, modern technology, and innovation-based work. So there is definitely too many variables coming into this calculation for economic Atmanirbharta, but that's the beauty of it, and that's where the Samajik Atmanirbharta, which is also one of the pillars about which I will talk, have a overlap. So in all this, and since it's a gathering of SBI's invited guests, the first thing I would emphasize on is financial inclusion. The more number of people who are brought to the formal financial inclusion process, and the more number of people who are going to benefit in their economic activity through banking extensions, the economy is going to be that much more robust. So for that, we need a robust banking and financial ecosystem. That will be my second emphasis. And the third, above all, which exclusively comes to the state government's domain and the central government's domain, is fiscal prudence. So economic Atmanirbharta will be achieved only when we keep all these factors in our mind. So what efforts have gone? Since I started by saying from 2014 itself, there have been a lot of attempts to do the foundational work for the achievement of Vikasit Bharat. You might have heard these statistics before, but I'm just giving you the nuggets. It tells you where consistency in policy, stability in governance, and pursuing every particular money that is going down to the last post, welfare or infrastructure creating, you are looking at taking the money allocated in the budget to the last point. So infrastructure creation has been our major focus in order that our self-reliance really stands on proper footing. So your economic self-reliance is not going to be realizable without adequate and also proper infrastructure. So look at what has happened in the last decade. The capital expenditure allocation has increased nearly 5 times, where it was closer to 2013-14. It was actually at 2.30 lakh crores. And where is it today? 11.21 lakh crores. So that is the proverbial putting the money where the mouth is. We've actually shown it in the last 10 years. And I closely monitor how much actually gets spent much before my RE numbers are fixed. So it is with that seriousness that allocation is followed till the last post where it has to reach. So national highways therefore grew by 60%, and where it was 11.6 kilometers per day in 2014, it has reached 34 kilometers per day in laying of these national highways. So is the metro rail connectivity. 23 cities in India now have metro. Some of them complete and up and running, a few where the work is still on. So from about 250 kilometers, which was in 2014, today India has 1,000 kilometers of metro lines in operation. So if you look at then port capacity, It doubled to 2,762 MMTPAs. Overall vessel turnaround time, which is very important in terms of trade facilitation, has improved from 93 hours to 49 hours now. So we have undertaken countless path-breaking ease of doing business reforms since 2014. I don't need to remind this August gathering that 1,500 archaic laws have been removed, 45,000 compliances have also been removed. The goods and services tax reforms, new generation GST, is something about which we've spoken severally in the last couple of weeks, essentially focusing on rate reduction, you would think, but I would think rate reduction, yes, but process simplification, classification clarity are also part of this GST next generation reforms. I'm here on the invitation of SBI, so it will be only very proper to say banks have helped in economic Atmanirbharta by aiding financial inclusion and credit creation. So a big credit to our Indian banking banks. Today we have 56 crore Jan Dhan accounts. So financial inclusion actually getting executed through the banks in the ground. 52 Mudra loan accounts Yojana, 52 lakh I think, and 70 lakh PM Swanidhi loans, creating a large pool of young entrepreneurs at the local level, tier 3, tier 2 level, and they belong particularly to marginalized groups. So social inclusion, compassion, making sure that everybody participates are reflected in these sort of numbers that you see. These schemes have actually democratized finance and brought economic independence at the grassroots level. Much is spoken about the PLI scheme. I'll just give one pointer. PLI schemes have witnessed exports surpassing 5.31 lakh crores, which is around 61.76 billion US dollars. Would we have imagined PLI schemes, which were launched sometime in the middle of this tenure, PM Modi's third tenure, in the middle of these 15-12 years, have already yielded positive results, and 12 lakh direct and indirect employment has been generated because of that. So if this much can be said about economic Atmanirbharta, the social Atmanirbharta is the one which I would like to just give you a few pointers to say. That's my second pillar. I said it has to be laid on the foundation of 4 or 5. This is my second. Social self-reliance, like Antyodaya, actually has empowered people who actually individually on their own couldn't have made any difference in getting some more dignity and security into their life and bringing in opportunity. But we need to change from patronage-based support to irreversible empowerment and independence. I think this line is one fundamental reason why we were able to lift out of multi-dimensional poverty such a large number of people. And that couldn't have been realized without the approach of empower people and not really patronize them. So that has actually brought the difference. I would actually say our goal must be a society and people that stand on their own feet, confident, caring, and united. Self-belief and collective strength must replace dependence and helplessness. So what are our efforts towards achieving social self-reliance? The compare and contrast or understand where the foundational work has already happened. In the last 11 years, PM Prime Minister Modi led NDA government has launched efficiently several welfare schemes, and some of which I would like to not just highlight but also talk about the collateral that it has given. 4 crore people have got PM Awas Yojana, data something which all of you all know about. 15 crore plus people have got tap water connections. 12 crore toilets have been built. 10 crore LPG gas cylinders have been given for those who get the subsidy as well. 81 crore people have got free ration. But if this is one set of data, more important and that which appeals to me a lot is the digital public infrastructure enabled direct benefit transfers. And direct benefit transfers may mean immensely a lot for the person who receives money or the welfare, whatever allowance, directly into his account. It's a brilliant idea for the person because he doesn't lose out on being taken away for middlemen. But as a country, what have we got out of it? A total of 47 lakh crores have been passed on to people through DBT since 2014. Little by little, more schemes got added. So till today, cumulatively, all of them put together, 47 lakh crores have been passed on through DBT. And how much have we saved as a country by using DBT method of passing money to the people who need to get it? 4.31 lakh crores have been saved for the government. So using technology to benefit and simultaneously having the financial inclusion program happening, so individual get their bank account verified, KYC tested, and through the Aadhaar platform, when you're sending the money, you actually send it fully and without any pilferages to the person who needs to get it. But more importantly, government has also saved the money. After all, that money can again go back through various other ways to the people. So when I said because of these methods, you were able to get many people out of multidimensional poverty, 25 crore is the number of people who have come out of poverty, multidimensional poverty, and that is a very big number, which is normally spoken when you go for your World Bank meet or IMF. Countries do approach you and say, remarkable achievement, how did you do it? And they do talk about it to see if there is anything that they can learn from our experience. And I would think the way in which India demarcated 112 districts as aspirational districts, and in them focused every scheme of the government to be reaching the public and monitoring it through different platforms, and PM himself once in a month monitoring the progress through his Pragati program, where he interacts with the district collectors directly. You were able to achieve these goals. So I think it is important. So are we just giving all these free ration and getting houses built and only that much? Are we not doing much in education? Yes, we are doing a lot more on education as well. Universities grew from 760 in 2014-15 to 1,340 in 2025. So if you're looking at Vikasit Bharat, without building these institutions, you're not going to be having that kind of an access to good education. Similarly, colleges. In 2014-15, you had 38,500 colleges, 38,500. In 2025, there are 52,000 colleges established. So education is receiving its due attention, which has to be given. So does it stop at that? 7 new IITs have been built in this last 10 years. 6,500 more seats have also been added up. 8 new Indian Institute of Managements have been built. And today you have a total of 21 of them. And 16 new aims have been set up all over the country. So the institutions, building them up, bringing the faculty, adding new seats, giving access to higher education are all part of a good educational framework. Similarly, the healthcare system is something on which I like to place emphasis. 55 crore individuals have been included under PM Jan Arogya Yojana, Ayushman Bharat that we popularly refer to, which means 12 crore or a bit more families have benefited because of this Jan Arogya Yojana. 17,000 Jan Ayush Aushadhi Kendras have been set up, which give affordable medicines because generic medicines are being given. They are bringing down cost by 60% in total for every family. So now I move on to technological self-reliance. Design, develop and deploy technology without external vulnerability. That's the Atmanirbharta that we are looking for in technology, from ideas also till execution. So indigenous R&D, ability to convert knowledge into national capabilities, and intellectual sovereignty are very important even as we work in these fields. And I would think technological Atmanirbharta is not only about hardware or manufacturing, but it's also about data sovereignty, digital trust, leadership in emerging frontiers such as AI, quantum tech, space and biotechnology. So it is this direction that we want to take, and what is our effort there? Our government has used technology for inclusive development, as I gave you examples earlier, ease of living, and also for technology-led growth. There are today 116 crore mobile subscribers in India, 116 crore. Cost of data, which is very important for democratizing connections. Cost of data has come down to 10 rupees per GB from 300 rupees per GB, which was in 2014. So this has reduced the digital divide. I remember a couple of years ago, everyone, particularly during COVID, we were periodically reminded, and rightly so, saying it's all right, you're providing DD to give you education, or you're sending digital kits. Will it reach our rural areas? Will it reach the poorer sections? So nearly 200 special programs were created under Doordarshan. So they can go to the classroom level, teach them. Doordarshan can be seen at home. So classes happen through even Doordarshan. So digital divide, if this is the number that we are talking about, and if this is the cost of data per GB, which is called the cheapest in the world, and as a result, the divide is getting bridged and bridged literally to the last household. We have opened up frontier sectors for private participation, for participation by startups. Drone and space are two classical examples, and India's DPI is unparalleled, of course, I don't need to elaborate. The PLI scheme for the large-scale electronics manufacturing has actually made out India to be completely transformed into a net exporter of mobile phones from being a net importer. The AI Action Summit, which was held in February 2025, India and France co-chaired the session to promote ethical use of AI, which is equally important. As much as AI's development, equally parallelly we should take care of ethical use of AI and the development of AI systems that are human-centric, safe and trustworthy. So earlier in the week, I'm sure most of you will know, Honorable PM launched 1 lakh crore research development fund for innovation R&D schemes, so that the private sector can also benefit from it. The last but one is the strategic self-reliance. We have very clearly stood out in making sure that the autonomy of decision making in matters which are important for national interest and for sovereignty are kept intact. I think this will get strengthened more with food security, energy, minerals and defense needs also becoming self-sufficient. So our diplomacy also extends where we can maintain that freedom, and in order that that area works well, I think we have a played a very significant role in international affairs. India also is emerging as a Vishwamitra that builds bridges with countries. So one area in which I think I notice a big difference is indigenous defense production and exports, which have improved substantially. Defense production is now at 1.51 lakh crores. Defense exports have jumped 34 times since 2014 and now records 23,600 crores in terms of earnings from exports. So there is so much more to speak on the first responder role that India plays, whether in the island nations or in our immediate neighborhood. And the last thing that I would like to emphasize on is the energy security. It's a very important area. We need to have a harmony between growth and nature. Independence from fragile global energy and resource systems is something which any country would want, and India should certainly have it given our growth aspirations. So what have we done on that? Diversifying clean energy and its sources to reduce carbon emissions. Quite a lot of effort is going on. The International Solar Alliance is something which has been received very well by our friendly nations. Many of them have joined. And it's important to notice here that the nationally determined contribution target of 40% of installed capacity from non-fossil fuel sources in November 21 itself was achieved, 40% target, a full 9 years ahead of 2030 target, and this was completely self-funded. Similarly, non-fossil fuel sources, renewable energy, hydro, nuclear, at about 256 gigawatt, over 51% of the total installed power capacity has also been achieved. India is recognized as the 4th globally biggest in overall renewable energy capacity. Mission Life is something which we are actively promoting so that individuals also contribute towards global awareness. India's green cover has actually grown, and today there is a net increase of 16,630 square kilometers in forest cover. I'll conclude by saying these are very important for us to recognize, and this road to Atmanirbhar Bharat is one of courage, cooperation, and constant adaptation. India must act together. Where they said slow and steady would win it, I would say mindfulness and steadiness would improve, because we have to constantly be mindful of the route that we are taking, the method that we are adopting, and the way in which we are implementing and progress in that direction. But of course, we have global headwinds. Global institutions are fading, so there is no one or a few institutions which can govern or regulate or guide globally on the right way to go forward. Capital movements are becoming speculative. The chairman in his address spoke about weaponizing global commons or weaponizing global instruments which are important for growth. Volatility and uncertainty are everyday language. So with these, you know what kind of headwinds we will be facing, whether it is in terms of currency, exchange rate, or inflation, globally driven inflation, and so on. The other challenges which I will just flag but not get into details are skills and productivity gap, particularly with upskilling requirements which are coming in because of AI, innovation in ecosystem, deep collaboration is required between academia, industry, and government at every level. the central government level, state government level, and also the local body level, and it is required for both manufacturing and also for services. Access to finance is absolutely critical. Banks have to continue to play that role and make sure that we deepen and widen credit flow. A system-driven, transparent lending process is essential. We have to learn from the ghosts of the past and not be constrained by them or not be fearful of such steps which were taken earlier. But I think today, once we have professionalized our banks, decision making also will be professionalized. Fiscal prudence, it's my responsibility to talk about it. We are maintaining a sustained self-reliance principle in making sure that our fiscal discipline is never threatened. Balancing growth spending with fiscal stability will ensure macroeconomic resilience, keep inflation in check, and also preserve investors' confidence. Leadership and vision is a very important factor. India is the only country which I can see offering a stability even in this kind of a very turmoil-ridden world, and I think that is one of the advantage for India. And finally, mindset to continuously carrying out reforms will be important, whether it pertains to central government reforms, state government reforms, or regulators reforming themselves, or judiciary. So in all these areas, we need to have greater attention given to meet the challenges so that we can, for sure, reach Vikasit Bharat. Thank you.
Thank you, Madam. Ma'am, can I please request you to be seated on the stage for a quick Q&A session. I would also want to invite Chairman SBI CS Sethi to please join Madam Minister on the stage for a quick Q&A session.
Thank you, ma'am, for very, very comprehensive context setting for this conclave. What I liked in your presentation is in terms of laying out what actually self-reliance means for India. And truly Atmanirbhar Bharat has to not only look at economic resilience, but also economic, social, technological, strategic, and environmental. I think enough food for thought for the conclave. We will be running these themes across our panels, across our keynote speakers, and probably will build the consensus on many of the thoughts what you have generated today. I also liked, ma'am, the courage, cooperation, and constant adaptation. I think these are the critical elements in our journey towards self-reliance. Thank you very much for those ideas what you have given. Ma'am, I have a few questions of my own before we open up to the audience. The first question is the overarching theme of our conclave. You have set the context, of course. While it is true that world is in a fragmented order, IMF in its latest update indicate that prolonged uncertainty, more protectionism, and labor supply shocks could reduce economic growth. Even though, ma'am, our SBI research team forcefully says India will possibly close the year with a growth rate close to 7%. How do you see India's quest for self-reliance? Of course, you have laid out very clearly, but from this backdrop of economic growth rate, while we philosophically have laid out our 5 pillars, on the ground, we see that there's a good amount of consumption demand coming back. In our Q2 numbers, we surprised the market in terms of our growth rates, I think aided predominantly by the fiscal measures what you have taken and banking related measures the regulators have taken. My question is that how do you see in this backdrop the growth rate momentum?
I don't want to sound too ambitious or also giving a statement of overconfidence. But I can very clearly see that India has shown its capability, markets, and also the way in which, in spite of the global uncertainties, people of India have responded to a next generation GST reform. Every sector saw it even on the first day, September 22nd. Some saw it even earlier because they opened up earlier. Now, why do I just start my answer or reply to this particular question from the GST point of view? I think GST shows in terms of small, medium, and large purchases, big ticket purchases or small ticket everyday item purchases, the readiness of the people to respond to public policy. Indians have always responded to governments which are responsive. And I must thank the GST Council for having seen this point in unanimously coming out with the next generation reform. And that is showcasing how the economy is bringing out the best in it. If comes earlier, I'll jump one point and come back to talking about this. The argument which majority of the people would put forth in asking a question to me or to anybody in the government would be, all right, you're spending so much in capital expenditure, you're trying to rev up the economy, but is the private sector showing that much of interest in coming in and expanding their capacity, spending, investing, widening their capabilities and so on? The answer used to be, not from me, but from the industry itself used to be, the consumption horizon is still not clear. But from September 22nd, you're seeing the consumption horizon glaring as we watch it, as we observe it. So there is demand there. It was waiting to come out like an arc before you. It has come out. And I'm also seeing good many number of private sector capacity building and also equally credit also going out of banks. So it has actually kickstart the biggest, I would think, virtuous cycle for India. And if virtuous cycle actually speeds up at this pace, growth numbers can be what you want.
I know I think you probably restrained saying from any numbers, but we are seeing on the ground, ma'am. In fact, in my presentation, post results also I mentioned, while we would like to see more and more private capital expenditure to come back in a big way, one important reason people have been quoting in terms of sustained consumption demand, we are witnessing now. Even in the October numbers, we see that good consumption demand and also consumption credit, both in terms of home loans, auto loans. I think it's picking up, and we hope that the private capital expenditure will be sooner, will be taken up. But before I move to my next question, ma'am, I would like to just open up to the audience. A couple of questions we take from the audience, and then we'll come back to my questions. Yeah. Any questions? Yes.
Namaskar, madam. This is Chandrakant Salunke, President SEBI Chamber of India and Manufacturers and Exporters Association of India. I would like to bring a notice that, particularly firms are registered in two ways. One is an ROC, and in the second is firms are registered in state government. If you look at the 7 crore MSMEs in India, and mostly the partnership firms also there and proprietorship. But because of the registration under the state government law and judiciary, they don't have interest to to give the registration instantly. If we have to look at the competition with China, 180 million enterprises registered there, and we have 29 lakh companies registered on the ROC, and 18 lakhs now running, 10 lakhs are struggling. So I would like to bring, I want to suggest you how we had given the recognition to the startups can we bring out this register of firms to the ROC, where Indian SMEs, Indian enterprises can create more, credibility, particularly to follow the fair business practices, and mostly the banks are facing problem to reach the 1 crore, the customer base for the MSME sector, where, banking also can lend properly for to march towards Viksit Bharat. So I request you humbly take this note and discuss with the state government or bring out that, this register of firms to the ROC. It will be definitely, we will increase the numbers and also will be enhance the manufacturing unit activities in India. Thank you.
Would you like to respond, ma'am? Okay. Any other questions? Yeah.
Good evening, ma'am. Since we are here at the SBI Banking Conclave, I'll ask my question in the context of banking. I know that you've previously said that India needs not just world-class banks, it also needs world-sized banks. So, ma'am, is the government actively looking at further consolidation in the Indian banking sector? And is the government also actively looking at enhancing the FDI limit as far as public sector banks are concerned to 49%? Thank you very much.
No, I repeat that line. India needs a lot of big banks, world-class banks. And for that, of course, we will have to sit and talk with the Reserve Bank and also with the banks themselves to see how they want to take it forward. And also discuss with RBI about how they have an idea of taking or idea of building larger banks. So there's a lot of work to do prior to my saying, yes, I've taken a call or government is looking at this way or that way. And in that, work has already commenced. We are discussing with RBI, we are discussing with banks. It's not by creating from among those which exist today just by amalgamation. That can also be one of the route. But you need an ecosystem and also an environment in which more banks can operate and operate to grow. So that environment is actually well established in India, but I need it to be a bit more dynamic. So some work is happening on it.
Thank you, ma'am. So one of the pillars which you mentioned about technological resilience, taking cue from that, my question is, in a recent event, while releasing the report on AI for Viksit Bharat, the opportunity for accelerated economic growth, you have emphasized the need for regulations that foster technology innovation in a responsible manner, particularly in artificial intelligence, rather than stifling it. We would like to hear from you, ma'am, that what type of regulations you are referring, as there are divergent views about the role of AI on growth, innovation, employment.
I'm actually discussing a lot on AI and regulation of AI, both with the ministries and with Niti Aayog, just to make sure at a time when AI is opening up opportunities, we don't enter into a terrain with so much of gusto that we regulate it and result in stifling that. At the same time, the risks of AI unethically growing and into areas which can threaten individual, the data, or even some practices which are very easy to be misused by misguided elements. It also has a very big connotation if it is left unregulated, totally I mean. If it is left totally unregulated, the implication on national security, the implication on forces which can bring in illegal activity, whether it is drugs and other things, is very high. So as much as we want for increasing productivity, for efficiency, for scaling up the tools from AI, we should be mindful that it is also highly prone to be misused. We need to have soft touch so that we don't stifle the technology, but equally be nimble to be able to plug all the loopholes which can bring in national risk into the picture.
Yeah, without, encouraging the innovation without ignoring the risks associated with this powerful technological tool which is getting developed. Would like to take a few questions from the audience before I move to my next question.
Thank you. I just wanted to thank you very much. In fact, just yesterday, you have issued, or MITI has issued the AI guidelines, which are a fantastic framework which balance both the need for innovation and the need for some kind of regulation. And my only comment, and I think Secretary Krishnan even mentioned, that we will not hesitate if there is a need. These are non-binding, but we will not hesitate to make legally binding ones if we need to. I just wanted one comment, is that in the US, to be very frank, I think there's been some capture by the huge corporates. So the idea of leaving it completely unregulated does not make sense. EU may have gone overboard in regulations. We have struck a very good balance. Thank you.
Thanks for the feedback, Mr. Vakil.
Sir, can I ask?
Yes.
नमस्ते मैम, जिस तरह से आज आपने पूरे अपनी स्पीच में कंजम्पशन की बात की है और फोकस भी रहा है जीएसटी रिफॉर्म्स के जरिए कंजम्पशन को बढ़ावा देना, लेकिन एक मुद्दा, क्योंकि आप ज़मीन से चीज़ों को समझती है लोगों से मिलकर करके, लेकिन जो एक 2 से 3 लाख करोड़ रुपए तक का इकोनॉमी में नुकसान हो रहा है एफएनओ निवेश से जरिए, उसमें कई सारे छोटे निवेशक भी अपना पैसा गंवा रहे हैं, कई सारे ऐसे मामले आए जिसमें घर के घर बर्बाद हो गए हैं। तो क्या ये चीज़ आपके संज्ञान में है, क्योंकि ये पैसा कंजम्पशन में आ सकता है, इकोनॉमी को बूस्ट दे सकता है, और सेबी की रिपोर्ट भी बता रही है कि 93% लोग हैं अपना पैसा गंवा रहे हैं। सेबी ने एक मामले में जांच भी करी कि एक विदेशी फर्म जो है वो हजारों करोड़ रुपए का मैनिपुलेशन के जरिए कमाई कर गई। तो क्या आपके संज्ञान में ये सब कुछ है, और ये बड़ा पैसा कंजम्पशन में आके जो सरकार का मकसद है, जो आपका मकसद है, उसको और आगे बढ़ाया जा सकता है?
संज्ञान में है, मगर उस पैसा को कुछ और रास्ता में लेके जाना मेरा इरादा नहीं है। जिस रास्ता में वो जाना चाहते हैं वो उनका मर्जी। सरकार रास्ता बदलने के लिए नहीं, मगर उस रास्ते में जिस तरह के नुकसान हो सकता है जो आप विस्तार से बात कर रहे हैं उसके ऊपर, उसको अवेयरनेस के द्वारा बातें करेंगे या प्रोग्राम करेंगे, गांव-गांव तक जाकर बोलेंगे भैया संभालो आपको इतना नुकसान होगा, वो सब कर सकते हैं। मगर वो रास्ता किस रूट में जाना है वो बोलने का मेरा अधिकार नहीं बनता, ऐसे मैं समझती हूँ, क्योंकि पैसा उनका है, संभालना भी उनका ही होता है। हम संज्ञान में लेते हैं और उसके लिए कुछ अवेयरनेस के तरह काम कर सकते हैं। उससे ज़्यादा अभी कुछ मेरे पास आइडिया नहीं है। अगर आपके पास है तो प्लीज़ भेजिए, मैं एक्ट करने के लिए तैयार हूँ।
Good afternoon, ma'am. Very nice to hear the kind of words you have said about self-independence and Atmanirbhar Bharat. The way in which the electronics industry has responded to various initiatives. Well, why don't you feel that the times to come, the artificial intelligence, but more importantly, biotechnology, biomedical, and bioengineering are going to be the future frontiers of the industry? Can we not work out something for these sectors also in a very focused, designated, and an objective manner so that industry gets encouraged and gets active in these areas?
Let me assure you, they are not ignored. They are not bypassed. This 1 lakh crore which Honorable Prime Minister announced includes those areas. And also, it is not confined only to the government-related R&D. Private sector is also welcome to participate and benefit from that fund. So we are aware of the potential that lies there and we want to support them.
Good evening, ma'am. We are happy for the Government of India's policy on GST reforms, and the industry is very happy about that. Since COVID loans have been, most of the COVID loans have been paid by the industry, we feel like future capex, I think some support from the government by way of interest subvention is helpful, because the economy, most of the industries, people are still waiting when to spend for future expansion and all, ma'am. Maybe some support on the interest subvention is required for the industry. That's what most of the industries feel, ma'am. Thank you.
Okay. Ma'am, for the question from me, I think you did mention in your speech that the institutional framework, the rules-based approach is breaking down. And everybody is looking, obviously, in their own national interest, but beyond the national interest, the systems are breaking. So it's widely accepted that trade diplomacy should be paid with macroeconomic adjustment. So how would we protect our economic interests while executing economic cooperations with the European Union and particularly with the United States? I think this is one question everybody would like to be solved, in the sense that while we are doing quite a few things on the EU front, the economic stakeholders are waiting for some conclusion for the BTA with the US. So any thoughts on that, ma'am?
I think there's a lot of thought in the media about it, and every move that the Indian negotiators are taking towards getting the agreement signed is also reported in the media. We'll have to wait for that final destination to be reached. Efforts are being made. There's just no second thought on that. Commerce Ministry is very seriously engaged in negotiations with all these countries, I mean, at least the two you named, European Union and also with the US. The ministers now in New Zealand trying to tie it all up for an agreement there as well. So efforts to have trade agreements signed are in full force. We'll wait for the conclusions.
Thank you, ma'am. Yeah.
Very nice evening to ma'am and all the dignitaries. We were listening since last 2 months regarding those who are exporting to US. Some relief on tariff and rate of interest are still, we are waiting. Is there any program?
Well, if there is one, they'll announce.
I'm sorry if I have to.
So from the reforms, what we have been speaking about, self-reliance, of course, Shirin also had front-loaded one of the questions. While there have been a lot of performance improvement in the banking sector. And as you mentioned, ma'am, every time the government, responsive government, asks every stakeholder to respond, I think the response has been phenomenal. So is the case with banking system. When reforms in banking sector in terms of the recapitalization, recognition, and reforms have been undertaken, and professionalization of the public sector banks has happened, is there any something what you are looking, because the context is Banking and Economics Conclave, so what is that you are expecting from the banks to further? You did mention in your speech that banking and financial services play an important role in the self-reliance, and particularly from a point of view of financial inclusion. I think we have reasonably done on that front. Is there any ask from the banking system and the broader financial ecosystem from you?
Nothing out of the box. You have to be a lot more proactive, reach out, widen your customer base, and also make sure that what you do will have to be a blend of both the old-fashioned banking with the new technology-driven banking. You just can't now say, I'm doing it all digitally, and I will reach out to my customers online. All that is fine. But person-to-person contact, which was the trait of Indian banks. And even when technology wasn't available, you made big waves because of the way in which your banking operations were people-driven, customer-driven, your staff-driven. I think that emphasis on person-to-person contact, and there, of course, since I come from the South, I will say language is an important way in which you communicate with your customers. Even if they're proficient in Hindi or English, I think it gives a nice touch. We Indians are known to go abroad and say few words in French and few words in Spanish or few words in Japanese because we want to please the host. It is basic etiquette. And the only flack which I'm unable to defend on behalf of the public sector banks, I'm not talking about the private ones at all, is when, because of our HR policy, we post people with different mother tongues to different areas. I'm not blaming the policy, but not a word of the local language is spoken. That little element of touch which is required with your local customers, without them you're not there. You need to have that element come in. Technology can be anything. DPI can bring in great advantages, efficiencies, productivity, profit. But that human touch is what many of the earlier private banks had, which later got nationalized. I've heard in my family stories after stories of how they would go to the villages and meet up with the customers. You don't need to toil like that, which our predecessors did. But yet, you need to have that touch. And I would put that as a very big element for your growth. Please don't be tantalized by just the technology-related growth. There are people out there. Connect with them. You have actually, now that it's a budgetary announcement, and I would see each one of you all having to do it, credit rating of a customer, particularly MSME, will have to be your own. It's a budget announcement that you shall not have a credit rating outsourced company advising you on it. What's the logic behind it? You knew your customers earlier because the person posted there would tell you about the local, who's creditworthy, who's reliable, who's authentic, who's this, who's that. That's completely gone. Wouldn't you want to restore that? What kind of and also the ills of outsourced credit rating are up to our nose. People know it now. I cleared my debt, but still the agency has taken its own sweet time to correct my credit record, and therefore I'm being denied loan. At a time we want growth to be given the emphasis. You can't ignore any one individual who's contributing to the economy. So I honestly, through this conclave of SBI, appeal to all banks. Make sure your HR policies are such that you're not just recruiting for the sake of numbers, recruit for making sure that every staff posted at a branch would understand his customer, speak the language locally. At least if the top management doesn't speak, at least the branch level officials should speak. And I would strongly push towards performance appraisal based on his or her efficiency in the local language. That said, I think you have a very clear agenda. Credit will have to be made available. Even yesterday, I had 2 people approaching me saying, impossible to deal with your banks, as good as us shutting and going back to our local, money lender. Our paperwork has to be simplified. Of course, there's some work going on KYC. In the FSDC, we've spoken about it. All banks will have to sit and talk about it, and all regulators will have to come on one page. We'll do all that. But you will have to make your processes simple. You can't be putting the onus on the borrower to go on proving and providing documents till death comes. I'm sorry to be so blunt. If these small things are corrected, you will be one of the most appreciated institutions in the country.
Thank you, ma'am. This is a favorite theme and very close to FM's heart in terms of not losing the human touch. I think while high tech is important, high touch is equally important. I think that message is loud and clear. We will definitely, all the banks have been working on that, and in terms of what you mentioned, that the credit, the whole process simplification, ma'am, I would like to share with you as a concluding remark from me, is that we in SBI has undertaken Project Saral, simplify the processes what our employees are doing. While we have looked at customer journeys, we have had apps and reimagine the journeys, while the employees are empowered to provide simple solutions to the customers, we are working on Project Saral, and many things what you've been talking about the years we are undertaking in this project. Thank you very much, ma'am, and on behalf of SBI and all the people who are present physically here as well as virtually across the channels, I would like to place on record my heartfelt gratitude for you. Thank you very much.
Thank you so much, Madam Finance Minister. Now I would request Chairman Sir to please present Finance Minister with the green certificate. Ladies and gentlemen, a huge round of applause for Madam Finance Minister. Ladies and gentlemen, I would now request everyone to please be seated. We are now beginning with our next panel, the first panel of the day. Request everyone to please be seated. We are beginning with the first panel of the day. In the front, ladies and gentlemen, can I please request you all to take your seats because we are about to begin with our first panel of the day. Okay, to the first panel of the day, and a power pack one at that. The topic is Leadership in Uncertain and Disruptive Times, the Roadmap for India, Inc. This panel brings together leaders from banking, energy, consumers, logistics and digital finance, each grappling with volatility, transformation, and growth, and each charting a distinct strategic response to today's global environment that benefits the shareholders and also the stakeholders and the entire ecosystem. Ladies and gentlemen, please put your hands together for the moderator of the panel, Ms. Shireen Bhan, Managing Editor, CNBC TV 18. A huge round of applause for our panelists as well, Shri C.S. Shetty, Chairman SBI, Ms. Dipali Goenka, CEO and Joint MD, Wellspun India. Ladies and gentlemen, please put your hands together and welcome everybody on stage. Dr. Praveer Sinha, MD and CEO, Tata Power. Ms. Upasna Taku, co-founder, MobiKwik. Shri Vikas Kaushal, CNMD, HPCL. Dr. Anish Shah, Group CEO and MD, Mahindra Group. And Shri R. Dinesh, Chairman, TVS Supply Solutions. Ladies and gentlemen, huge round of applause for the entire panel. Please help me welcome all of them on the stage. Mr. Sethi will join you guys in a while. I think we can start with the panel till then.
Good evening, ladies and gentlemen, and thank you very much for joining us here again at the 12th Banking and Economics Conclave by State Bank of India. It is truly a privilege and an honor for us at CNBC TV 18 to partner with State Bank of India. This is our 12th year of partnering with State Bank of India to bring you the SBI Banking Conclave. I think we just heard from the Finance Minister setting the context for the world that we live in, the uncertainty that we're faced with. I'd request Mrs. Sethi to please join us on stage as well. She laid out for us the 5 pillars on which the government is attempting to chart out its growth path in this uncertain environment. And she talked about the economic self-reliance, social self-reliance, technological self-reliance, strategic self-reliance, and environmental self-reliance. What does India Inc. make of the uncertain world that we live in? And more importantly, what are the pathways for growth that India Inc. is going to position itself on? We have a very diverse but a very eminent set of panelists here who represent India in all its glory. So without further ado, let me start with our host today, Mr. Sethi. Congratulations are in order for the entire team at State Bank of India because you've hit 2 milestones, $100 billion in market capitalization and 100 trillion rupees in business. So 2 significant milestones there for State Bank of India. How do you feel, Mr. Sethi, and what do you believe has helped you power through both these milestones?
Thank you, Sharon, and thanks for all the eminent people who have joined this panel. It's always a pleasure to have this CEO panel in part of this banking conclave and moderated by, of course, Sharon. These 2 important milestones are also reflection, as I keep saying, is our commitment to the customer base, what we serve. The customer base of 53 crore customers, confidence had helped us to achieve this. The market capitalization is essentially the market would like to understand what is our business model, whether it is succeeding. I've been saying for the last 24 months that consistency is something what we followed and pursued. And I'm sure the market understood that and rewarding it us on that. The 100 trillion business levels is obviously is something what we are proud of. In this, we must realize that 67% of our loan assets come from the retail, agriculture, and MSME. It's not that the balance sheet is being built purely on the wholesale banking. And to that extent, I think it's a phenomenal growth which we have done in this particular segment. And this is only a couple of milestones, Sharon. I think we have many more to cross. Thank you.
What is the next milestone that you're hoping to achieve? You said that 100 billion in market cap and 100 trillion rupees in business. These have been 2 significant milestones. What's the next one you're attempting to cross, sir?
So I think, see, for India's ambition of becoming known to at least a couple of banks being in the top 20 is very important. I think we did have this discussion earlier also in your conclave, that what is so critical about being there? We have very large Indian market, domestic market, and which we are serving very efficiently. But I think to be recognized for our work through the being the top 10 global banks in terms of market capitalization is something what we look forward to, and we will definitely work on that. And I think, I personally believe that market capitalization is a reflection of a combination of factors what you're doing right. It may not really be very significant for anyone, right? But from an institutional point of view, our employees' point of view, stakeholders' point of view, the global recognition and the market recognition is equally important.
So top 10 by when? Top 10 in the world by when, Mr. Sethi? What's the timeline you're working with?
So there's no specific timeline, I think, but ideally we should be there even before 2030.
Even before 2030. So that's literally 5 years away. So that's an ambitious and an audacious task that you put forward for.
Since you mentioned audacious, I'll tell you how SBI thinks. In 2018 is the year where SBI posted loss for the first time in the history. And we had a conference in Calcutta. The conference theme was, how do you reach 100 billion market capitalization? Rupees.
In the
$100 billion.
in the year that you posted a loss.
Loss.
Yes.
This is the audacity, I think, which we pursue, and I'm sure that the next milestone is easily achievable.
Well, we wish you the very best of luck with that milestone. Since we're talking about the audacity of hope, Anisha, let me come to you now. You've also come off a very strong performance as far as your quarter is concerned. And you know, when we talk about the uncertain global environment, we also have to look at the positive domestic environment which you're benefiting from today. What's the next audacious goal that you've set for the Mahindra Group, just to take forward where we left off from Mr. Sethi?
At the Mahindra Group, our aspiration is to be among the top 50 most admired companies in the world. So this has an element of purpose because we always lead with purpose. It has an element of scale because to be in the consideration set, you have to be in a certain fortune number that you need to be. And that's what we've been on a path, and we've done fairly well, I'd say, over many, many years now.
Yes, you have done fairly well, but is there a specific milestone in terms of numbers that you hope to achieve?
So Shireen, we look at it in terms of beyond financial numbers, and which is why there is a number which is top 50 most admired companies, but in many ways the bar is very high for that because there are a number of things that we have to do in terms of, one, who we are, how we serve society, how we meet our financial targets, and all of that will combine for us to meet that goal.
You know, speaking about meeting financial targets, and I want to digress for just a second before we get back to talking about the uncertain world that we live in. Your stake sale in RBL Bank, Anish, that's created quite the headlines. I mean, a neat 62% profit that you made over what you invested in RBL Bank, and it kind of puts to rest any possibility of what you intended to do with that stake. But is this kind of treasury business what investing that you're looking at actively now from here on the back of the gains that you made?
So Shireen, we were joking that if we had a rupee for every time there was a discussion on RBL Bank, we would have had more gains than we actually made in RBL Bank. So no, this was a one-off treasury action where we actually saw significant value, but we're actually creating a lot more value in our businesses, as you've seen.
So you're not going to be investing like you did in RBL Bank in other companies at this point in time?
We are not.
That was a one-off. Okay, so let's address the uncertain environment. I think the two individuals here on this panel who are perhaps dealing with the bulk of uncertainties given what's happening globally, Dipali Goenka as well as Sir here who's leading HPCL. So let me start by asking you, Dipali, 60% of your operations are dependent on the US. We don't know which way Mr. Trump is going to decide what he intends to do with tariffs. The matter currently being heard in the US Supreme Court, the hearings began yesterday. As a CEO today, what do you do? How do you diversify your risk given this uncertain mix?
So these indeed are very tough times indeed. I mean, if you look at even the numbers, you can look at the export numbers to United States of America from May, fell by 37%, 8 billion in May to 5 billion now. So indeed, and the thing that I have seen, and I can talk about India, and I can talk about Wellspun, we have our time in the sun now. The time when the world couldn't believe that we could make the best towels or the best textiles or the jewelry or anything else to wear. There is that belief and faith in the products that we make. These are challenging times indeed. But I think the important things that we believe are diversify smartly, operate efficiently, lead responsibly. I think these are very important times where where we make 1 million units of towels every single day. We deploy more than 25,000 people at all our textile plants. For us, the most important thing is to let our factories go on, to keep our, customers with us. And you'll be surprised that today, I've just come back from America, and we are in strategic partnerships with all the top retailers in America. So they all believe in us, they believe in India and the story of India. So I think these are times where uncertainty looms, but sure, something will definitely come through it. At the same time, for corporates like us to hold on and operate efficiently, look at what we can do better, innovate better, and really take care of your people this time. Is a very important aspect, and take care of our customers, I think is going to be the key, Shireen.
No, that, what you say between customers as well as people is going to be very important, but how do you mitigate the challenge in the near term? You talked about partnerships with US retailers. Many US retailers, the likes of Target, etc., are cutting their guidance at this point in time, given the uncertain mix. So how do you operate? How do you position yourself as a company in the near term? The long term, of course, is a different story, but to mitigate the risks in the near term, Dipali, what are you seeing on the ground today?
So I'll tell you one thing, when you're talking about the retailers cutting down people, it is also because, during COVID, people didn't go back to work. People were still working from home. And now there's a very important aspect when you're looking at the economy that the state of America is right now. They just are conserving costs, and I think the AI has disrupted this space. And I think those are important aspects when you talk about retailers. But if I talk about India, and if I talk about textiles, cotton textiles, India is the largest exporter to United States of America. And that is one position nobody can take. And I think the opportunity for us is this time looking at the long-term strategic partnerships, and that's what we are working with our retailers, whether it's the mass retailers or the discounters or the departmental stores. And I think, Shrina, just let me put something very, very clear. One aspect is, the relationship. The other is the serviceability. And for us at Wellspun, when we talk about ourselves, we don't only talk about the product that we deliver, we understand the consumer there as well. Today, when I can talk about, I'll know what is selling on the West Coast, what is selling on the East Coast, or what is selling in, Louisiana, because, my people are sitting in America. I actually do, direct shipments to all the retailers from my warehouses. So there's the serviceability that really matters as well. And I always believe one is the cost, and nobody can replace the serviceability. And at heart, I think at India, if we believe that the customer is first, we are going to win by the end of it.
Well,
sure.
we certainly hope so, and of course we also hope that there is a conclusion as far as the tariff issue is concerned, as well as the BTA. Sir, for HPCL, in the context of energy security that we're talking about, it is an uncertain time. We've just seen sanctions being imposed on Russian entities like Rosneft. We're also seeing the US make it very clear that they want India to import more from the US, and that of course is now the stated intent as well. Run me through what is happening on the ground at this point in time. We understand that November 21st is the deadline after which ships are going to be sent back if they have any crude from sanctioned Russian entities. What does it feel like in the boardroom to navigate this uncertain environment?
Thanks, Shireen. I was anticipating that as the first question. Interestingly, journalists know more about Russian crude than oil refiners know these days. But I'll start off by saying, yes, it's a very uncertain world. It's uncertain on many ways, and you've focused on one aspect of which is sourcing of crude and the sanctions and related topics. In some ways, my world is different from Dipali's world. Her market is there, and that changes a lot for her. For me, the market is here. Yeah. We are primarily focused on supplying the Indian market. That changes the dynamics in some ways. Of course, the challenge for me is 85% of the oil we import in country is actually imported. It's imported from different sources, much less from US, a lot more from Middle East and Russia and all those places. What are we doing about it? 3 or 4 different aspects. First, of course, as a responsible citizen, we have to comply with all sanctions. So we will abide by international law, so we don't pick up sanctioned cargoes. Having said that, oil world is very diverse globally. There are multiple sources, and organizations like ours are expanding the sources where we have looked at. And this does not happen over like, oh, I buy a cargo and run it on my refineries. Thankfully, this has been done over the years. So in our refineries, we can process about 180 different crudes. So literally every crude which is available in the world, we can process it. We have the properties, we know what can be made out of that. We are using that knowledge to diversify our sources. That's one. Second, as you said, there is, I would say, stated, unstated desire to have more from US, though there is no formal trade policy on that. But we are also finding, given the economic reasons, some of the US cargoes are starting to become more economical to us here. Either the ships are bigger or the cost of their cost of production is cheaper. So naturally, some of that flows in when we take the economic decisions around it. The third thing which is very important for us is, and it's some way similar to what Dipali was mentioning, what do we do as an organization? Yes. How do we strengthen ourselves? How do we get our costs lower? How do we get our efficiencies? In the context of refining, it's very important to get the flexibility going. You know, I have the Mumbai refinery a few kilometers from here. It was designed for Mumbai high crude earlier, but now I need to run it on different crudes. As a result, I need to know what I need to change. How will I make it run more efficiently? So that's, irrespective of what happens on the outside world, getting the internal strength going is super critical, and we are very focused on that.
Well, yeah, and I understand that it is a much more complex issue than, being captured in a few headlines on the news. But, you talked about energy security in the context of diversification. You said that you can process crude from 180 different sources need be. But at this point in time, what are you anticipating in the market as far as the supply and price dynamics are concerned?
Yeah. I think if you look at the crude prices, which, as you can imagine, we probably look at it a dozen times a day, they have been very range bound. Even today morning, it was 63. The Brent was 63. Yeah. It did go up to 70 a few weeks ago.
Are you looking more closely at the Henry Hub now, sir?
Yes and no. Both go in tandem. Henry Hub's more suitable for the gas markets. And it's in public domain, I can speak about it. HPCL has signed gas-based deals on Henry Hub. It's more applicable for getting LNG into India. But there is adequate amount of crude in the market, and it's only the question of matching the right supply with what you can run a lot more economically. But having said that, we literally track all those movements every day. We track what's happening. We have a trading desk. We are enhancing our capabilities on that so that we learn to pick up those crudes a lot more efficiently. So a lot of operational efficiencies going, trying to bring in both the science and art into this and trying to tide over those things. Having said that, I think not only for me as an oil marketing company, but a lot of the peer companies have given very strong performance. If you see the quarterly results, they have been blockbusters. Most of the shares are 52-week high. So I think many of the investors here believe that we know what we are doing, so that's why they have given faith in us.
Yes, absolutely, and I'll come back to that in just a second, but let me get Dr. Sinha into the conversation as well. Sir, renewable energy globally at this point in time, particularly as far as the US markets are concerned, facing some uncertainty and headwinds, but not so much here in India. We're on track to being able to achieve the targets that we've set out. What as you look at the environment today, are the risk factors as well as the opportunities that you're positioning yourself for at Tata Power?
Thank you, Shreen. Always a pleasure to be part of the discussion. Thank you, Mr. Shetty. I think India has a very different roadmap compared to many other parts of the world. For us in India, we fortunately have a lot of places where there is good wind speed, and that's why there's a lot of wind capacity that comes up. Most of our places in the country have more than 300 days of sunshine, and that's why you have a whole lot of solar plants which is coming up. Now, India's transition, energy transition, is something which started just 10 years back. And it's a great opportunity for India to make a roadmap which is very different than what has happened in the world, because most of the other places, they already had stagnated. They had already set up a huge capacity, and there was no room for them to move to a new way of producing energy. And I think in India, we have been very fortunate that the type of capacity additions that we have seen, in fact, last decade, we used to have something like 5 to 6 gigawatt of capacity additions. Last few years, it went to 10, 12. Now we are seeing something like 30 gigawatt last year, and this will continue to increase. So I think it's a great opportunity for India. It is not only good for environment, but it is good for business, because the cost of producing is very low. The challenge is that this is intermittent. This is only few hours. You have few sun hours and you have few wind hours. So what do you do during the phase that you don't have? And that's where some of the other storage technologies are coming in. We have battery storage, we have pump storage, and some of the other new technologies on smart grids which are there. So I think for India to transition to the clean energy is much easier compared to many other parts of the world where they are struggling with it, because what do they do with their existing assets over there? And I think the way we look at it in the country and the way we look at it in Tata Power, that this is the beginning, this is the tip of the iceberg, this is the beginning of a whole renaissance in the way the power sector is going through for the next 10, 20 years. And we feel blessed, and we feel that this is an opportunity.
Will the renaissance be powered by the need for a bailout for discoms, which is being rumored and talked about today? Will that power and trigger the renaissance that you speak of, sir?
So that is always been there. So the discoms have been like that for last 30 years. It's not something that has happened in last 5 years or 10 years. But now at least there is a sense that this needs to change. Of course, there have been 2 bailouts which have happened, or 3 bailouts which have happened earlier. But hopefully this time there would be preconditions, and the preconditions are that they would go for public-private partnership or privatization exercise. So hopefully this should be the last bailout, and thereafter they should be on self-sustaining basis. So
what's the sense that you get on how close we are to that decision being taken?
I think we are very close to that. Mr. Shetty would be knowing that the total outstanding of all the discoms is something like 7 lakh crores, and it keeps on adding by 60-70,000 crores every year. So this cannot continue for very long, and people cannot put it under the carpet. So this change has to happen. I don't think there is any other options with the state governments as well as the state discoms. And this is a good opportunity for us. I always keep on saying that distribution is an area that is about consumers, reaching out to consumer, giving better service. And Honorable Finance Minister was talking about customer service. Distribution companies do not give customer service. That's the last thing in their mind. And if we can transform this, and we have done it in many places, Mumbai, Delhi, and Odisha, and some of the states, if we can do that, it will be absolutely a game changer.
Well, I'll talk about your ambition to power up other states like UP, etc. in just a second, but let me get Mr. Dinesh into the conversation as well. The Finance Minister was talking about supply chain resilience, also talking about the opportunities. The logistics sector in India has seen a significant change, a massive explosion over the last few years as well. As you look at the pathway for growth from here on, Mr. Dinesh, are you more optimistic about where we are, or do you have some specific concerns that you believe need to be addressed today? What is going on in the boardroom?
Thank you, Shireen, and thank you again, Shetty, for bringing me here. I think if I look at the logistics sector, today it is occupying, I would call it the topmost priority, and exactly for the reasons you mentioned, which is supply chain resilience. While we may be discussing about specific issues happening between one or two countries today, I think the horse has left the stable in terms of making sure that globally every supply chain is integrated. So whether we like it or not, I think we are going to see Indian logistics sector continuing to grow at a much faster pace. But I think the real transition which I'm seeing happening as we speak is the efficiency which is coming into the sector. And that's where I think there are two aspects to it. One is the visibility which is being created across the supply chain, because the cost in the sector is not the transportation or the warehousing, but is a lack of visibility of what is being held in stock, when can it be supplied, and where is the gaps in terms of the supply chain. The second is in terms of converting it into what I would call digital solutions. And I think Indian companies are definitely standouts in terms of that. And I believe going forward, you will see a significant pace of growth for this sector, and therefore for the logistics companies as well, based on that.
So if I could just ask you to take forward what we heard there from the Finance Minister. She listed out 5 pillars that the government is focused on: energy reliance, technology reliance. What would those pillars be for your company at this point in time as a leader that you intend to prioritize to drive growth as well as chart out the uncertain times?
So I think technology reliance is absolutely important. I would call it, that's going to be a big differentiator for any Indian supply chain company to showcase. And second is, how do we leverage the infrastructure build out which has happened? And if I can say that there are 2 elements to it. One is from the government side, where the visibility, they've just opened the Gati Shakti data availability for companies to actually start tracking. And the second is, how do we actually make our customers get the maximum visibility and they get the maximum value? The last bit is I would call it working with the small scale sector, because India is still a very fragmented logistics sector, and if the large companies don't find ways to partner with them and make them more efficient, you will still see logistics costs being high. So these are the 3 pillars on which all of us are working.
Partner or consolidate?
Partner.
Partner.
I don't think consolidation is a solution which is going to work in that sector, because the return on capital employed metric which you apply will never apply across the transport sector, for example.
Okay, so partner, not consolidate. Upasana, let me come to you now. What would you consider as the biggest opportunities, and what are the uncertainties that you're preparing for as you look at the mix today?
Thanks for asking that, Shireen, and you're completely, blazing today. Thank you very much to the SBI team and Mr. Shetty for having me here. I think that attending this session is some sort of a university for me. I have a lot to learn from the august members here on the panel. But in terms of uncertainty you spoke about, and how we are preparing to cope with it, I would say that, ma'am spoke about technology, and just for everybody's knowledge, I run a fintech company called MobiQuick. So I think we've been grappling with uncertainty from day one. I think uncertainty is not a one-time incident or episode for us, and I would say it's a quarterly or biannual event, because unlike other markets, India fintech is very regulated, and of course the government, the Reserve Bank has been very industry friendly in rolling out regulations. But unlike other markets, we don't wait for something to be a well-established product before the regulation comes in. Regulation is also sort of from Series A, it's now coming to seed stage and getting started right there. And so what that means is that you plan for something, but before you know it, you have to innovate with far more, guardrails that you need to take care of. So agility, risk discipline, compliance to regulation, and customer friendly, it's a balancing act. And given that, starting from payments, we are now trying to do inclusion in terms of distribution of financial products. So that means more licenses, some from SEBI, some from IDA, and others from RBI. So I think that living with uncertainty is sort of part of the muscle now. Last 15, 16 years that I've been building this, I think that not just for founders or CXOs at fintechs, even the leadership team, has to learn very quickly how to grapple with change, and with a changing scenario, how to come out on top. I can give you a very simple example. We started out as a wallet company when we just had 1 or 2 competitors. They all got started. We were all growing fantastically because digital payments was just getting started. And then, of course, we got the open rails of UPI, and it's an amazing DPI and opportunity for everyone to scale up. But of course, it was also looked upon by various global players as an opportunity to get into the Indian market without having to be regulated in the form of getting any license, because running a UPI app does not require a license. You build the app, you test it with NPCI, and there you go. And nothing wrong with that. So in the recent few years, that's been the struggle. About a year ago, we got listed. So we are a very small, young listed fintech. There's talk about stakeholders trying to do the right thing on the bottom line, but there's also pressure on growth. So I want to tell you that the problem that we were working on last 6-7 months, and I can say that now because we recently, gave our latest results. In the last 6 months, we are the top 3 fastest growing UPI app. And this is despite the fact that we don't have a backer like some of the American trillion-dollar companies. So we don't have insane marketing budgets. We have huge pressure to turn EBITDA profitable ASAP basis. So yeah, I think that's sort of the uncertain times that we live and operate and build for.
And congratulations on listing. It has been a year, and of course, we've just seen you announce your numbers. But Upasana, would you then say, we had the finance minister here respond to a question as far as F&O is concerned, and I think the market will heave a sigh of relief because the message from the finance minister seemed to suggest that the government is not looking at any kind of a ban as far as F&O is concerned. It's up to the market, as she said, to take the calls that they wish to take. But that was a regulatory risk for brokerages. Many of your peers, for instance. Is that the #1 risk factor for you, or does it continue to be the #1 risk factor for you today?
Yeah, I think regulatory risk continues to be the #1 risk for any fintech company, because so we recently got the broking license. We haven't launched it, so we have the opportunity to build in a different way and hopefully a far more customer-centric and first-time investor user-centric way. But that is the #1 risk. I can tell you that, we spoke about how we started out as a wallet. At one point in time, the KYC requirement for a wallet used to be different. Sometime in 2017 or 18, the same regulations that apply to banks and NBFCs for KYC got implemented in terms of full KYC for us. Now that came out of nowhere. Nobody planned for it. There were no budgets of doing full KYC. So those kind of things happen, but it's a systemic thing. It will hit everybody in the industry at the same time.
Yeah. That's a issue as well. But let me get a quick pulse check here, because from everything that I've heard on this panel, despite all the uncertainties that we've been talking about, each one of you is optimistic and confident about the road ahead. Yes. If you can raise your hands if you feel more confident and optimistic about 2026 and going forward, as opposed to being pessimistic. Those of you who are optimistic, you can raise your hands, please. Everyone. So consensus, unanimous. So Anisha, what are we basing this optimism and this confidence on at this point in time as far as India Inc. is concerned? Because it's very different if you were to compare it to CEO sentiment outside of India.
Shireen, I would say economic opportunity the resilience that Indian companies have shown, and the ability for Indian companies to be able to start competing in the world. So if you look at economic activity first, I would go and take a bet that India will grow at 8 to 10% a year for the next 20 years. And that is based on demographics, on the infrastructure that we have, both physical and digital, and the reforms, but more importantly, the commitment to more reforms that the government has shown. And we are seeing that in results. So if you look at resilience, yes, we've had a tough quarter, but you've seen our results recently. And as we look across our businesses, our farm business has grown profits 54% year over year. Mahindra Finance 45%, Tech Mahindra 35%, our growth gems 22%. And our auto business, 14%, we've had some transition risk, which we'll catch up on. But that is what we are seeing in terms of growth. And today, Indian companies are ready to compete with the best in the world, with R&D in India, with quality, and the ability to have strong management teams that can take on risks. As many of the panelists have said, the world has changed, but our management teams are ready to take on that changed world.
You know, since you speak about taking on the world, Anish, and I know that exports have been part of the priorities that you want to focus on, does that continue to be the commitment for you, given the uncertainty, or are you pulling back at this point in time from the export prioritization that was something that you were very keen on?
Our auto exports are up 40%, and we continue to do a lot more. We are still small, and we need to do more in markets around the world. We are setting targets for ourselves to get 10, 15, 20% market share in certain markets around the world because of the products we have. And that's again a reflection of the kind of products that Indian companies can build.
So when you talk about becoming world class and world competitive as far as the global pecking order is concerned, what would you prioritize? Would it continue to be tractor and the auto segment that will be the focus area for you, that will be the export engine growth area for you?
We have multiple businesses, so auto and farm have been the larger businesses, but our growth gems now are rapidly increasing. We're looking at our aerostructures business growing about 20 times from where it is. And that will become a strong global business. We're looking at a few other businesses, holidays in particular, where we've got 100 resorts in India. We have 35 resorts in Europe right now. And we will look at going more global from a holidays perspective as well. So whether it's services, Tech Mahindra, of course, is global today. Whether it's services or whether it's auto and farm, I think we will do a lot across the world.
So is there a number that you want to leave us with over the next 5 years in terms of CapEx as well as R&D spends? Because you talked about the need for greater innovation, greater Indian-driven innovation.
So the number that we have talked about for our businesses right now is in the range of 30 to 40,000 crores. And we feel that we will do a lot more than that.
You'll do a lot more than that?
That was for a 3-year period, so that's not quite till 2030, but we'll do a lot more.
Mr. Kaushal, let me address that with you as well. Given the opportunities that you see today in India, how are you positioned in terms of CapEx, in terms of the opportunities that you want to leverage and capitalize on?
Thanks, Shireen. Let me start by saying why am I optimistic? 2 reasons actually. One, the macro. Anish said 8 to 10% growth. I have factored in 7, but if it grows at 7%, Indian economy grows at 7%, energy in India grows anywhere between 5 to 6%, 5% roughly, that's the elasticity. Just to give you statistics, post-COVID era, about 20% of incremental increase in global energy has actually happened in India. We have consumed 1 out of 5 electron or molecule of energy, which has increased in the world post-COVID. And this is only going to increase. Obviously, it's going to be good news. Challenges, of course, but good news for people like me and Praveer and others in this sector. And also for Mr. Sethi, because he has a lot of people to lend money to.
He's already upped his credit growth guidance to 12 to 14%. Yes. So, how much higher, Mr. Sethi, on the back of everything that they're talking about?
No. See, I can go up to 15 also, but Anish is not taking money from
me. We have to get him to change that.
So I think just continuing on the macroeconomic theme, India is, we have consumed about 5.5 million barrels per day of oil. This will go up to about 8.5 to 9. We have about 258 million tons of refining capacity. In 5 years, it will be 300 plus, because that much amount of capital is actually being deployed as we speak. Similarly, energy, the power side of it, Praveer very nicely mentioned about some of those facts. In fact, there was a very interesting statistics on July 29th this year. It's a very important day because more than 50% of India's energy that day was produced by renewable sources, I'm sure. And on 30th September, more than 50% of capacity is on renewable right now. So there is a lot of energy growth, macroeconomic. So our business is going to grow leaps and bounds. The second part which gives me optimism is where is my business as an organization.
Yeah.
You talked of CapEx, so just to give you statistics, in the last 5 to 6 years, HPCL on its own or through the group companies has probably invested about $14 to $15 billion of capital. A lot of it coming from our friends out here, which of course we have to pay back very soon. But we built one of the most complex refineries in Rajasthan, which is going to go on stream. It's like everybody is focused on that. It's going to go on stream. 3 of us on the stage are involved in that right now. That's going to add a new dimension to refining. It is the most complex refinery built in India. We've upgraded some of the other ones. Our optimism gets driven by the fact that all of this capital is towards the end of the capex cycle, and it's going to start giving us returns. Parallelly, in the last few quarters, we have focused a lot on our operational efficiencies, taking out costs from our system, improving logistics, improving supply chains, and that has boosted our profitability. So we are on a good growth momentum, and I totally agree with Mr. Shetty. The market capitalization is a reflection of that. We did not hit SBI numbers, but HPCL for the first time did cross 1 lakh crore as market capitalization on 30th of October. So that was the first time, and we hope to build it further.
Well, many milestones being recognized and honored here this evening. Mr. Sethi, let me address the issue that I asked the finance minister, and let me get you to comment on that. Going from 20% to 49% foreign direct investment as far as public sector banks is concerned, A, do you think it's needed? Do you believe that that will be a game changer for the sector?
I don't know what exactly is happening in the government, of course, but I personally believe this differentiation between public sector and private sector banks, particularly in terms of what should be the FII component, I think is not really helping in terms of recognizing the true value of the public sector banks. A lot of people ask me if it is 20% public sector FII limit, if it is not consumed fully, for example, in SBI it is just about 10%, why do you need higher limit?
Yeah.
I think two things in this. One is most of the FIs look for the free, space available for them. And just compare a 10% free space available versus 74% which is looked at. So I believe that without compromising anything in terms of ability to have enough commitment from public sector banks, from the government, we are not looking at the dilution, right?
Yeah.
It is only free float. It is already available in the market. It is just that FII limit has to be enhanced. It would be a good thing to happen in case if the government is seriously looking at it.
We don't know which way the government will finally decide to move on this, but we understand that this is being discussed at this point in time. But there's a lot of interest in the Indian banking sector today. We've just seen significant deals being done in the private sector space, and perhaps one in the making. There is the IDBI Bank that's been in the making for many, many years. So perhaps that's likely to go through at the end of this financial year at least. Investors are looking at what could be the next trigger as far as Indian banking is concerned. What would you respond? How would you respond to that?
I think we need to look beyond the discussions on the consolidation, FI limits. There's a great scope for Indian banking sector domestically. And listening to all the leaders who are present here, 2-3 themes which are emerging, which I get a confidence that the banking sector would be, for a long time, it's going to have a good run. One is, most of these people, leaders who are here and the corporates have a very strong balance sheets now.
Yeah.
and very, very clear vision in terms of diversification of their market segments, diversification of their customer segments, and more importantly, customer at the center of their activities. So is the case with banking. So this gives a confidence that all of them, HPCL has taken a leading role in terms of capital expenditure and given us as an opportunity to be part of that major journey. But many of them obviously need, apart from their own equity capital, their own cash flow, which is available now, debt capital is a requirement. And that debt capital, today, all the Indian banks are in a position and in a willingness to provide that. I think it's a good story to look forward to.
It's a good story, but there's plenty happening as far as the equity markets are concerned. And you know, you've just announced the SBI fund IPO, offloading about 6% of your equity at this point in time. But you know, India has this year become to be known as the IPO factory. Do you believe that that is likely to continue?
Yes, it would continue. There's a good traction in terms of IPOs. The capital structures are going to be changing in the sense that people would like to have a combination of equity, debt both for the banks as well as from the market, and it's also a diversification of your sources. And as the transformation of savings are happening, I think we have had this discussion that the bank deposits alone is not the saving instrument. Obviously, the market savings are there. Those market savings have to come back into the real economy, not necessarily in the equity market. And so the corporates will be able to raise bond programs. And I think, I believe, apart from the equity, the corporates will be accessing both the bank capital as well as market capital.
As well as the bond market. Dipali, you know, we're all setting targets here, and I know that you had a target for FY27. Does the uncertainty change anything else as far as that milestone is concerned? No. I also know that you're in your silent period, but with all of those caveats out there.
No, I think it remains. So when I said that, you know, diversify smartly, I think the opportunity, apart from United States of America, is UK, Europe, and rest of the world, where the FTAs are also opening up. I think operate smart, you know, operate efficiently. I think when you spoke about AI, the smart factories is a reality, and that's what we're working on. And I think integrated, transparent supply chains from the farmer to the shelf is what we are working on. And lead responsibly. I think for us, being a part of the Dow Jones Sustainability Index and being #1 from India and #3 in the world after Moncler and the other fashion brands is kind of an opportunity for us. So I will say that, you know, the next couple of years is for India and for us as well.
Well, you know, since you say that the next couple of years is going to be for India, you also talked about the FTAs, the EU FTA under negotiation at this point in time. UK is already done.
Absolutely.
It's yet to be operationalized. What could the potential impact be, the beneficial impact be, as these FTAs are finally operationalized?
So, you know, when you talk about these 27 countries in Europe alone, I think the opportunity is not just the retail. The opportunity is the hospitality sector. We just opened one of the largest hospitality, you know, chain like Accor. And imagine the diversity of the supply chain. Can you believe you have your manufacturing in India, but you have your ancillaries across the globe? Imagine supplying the pillow fills from Estonia. Imagine you're supplying something else from another part of the world to all the, you know, all the retailers. So I think the important thing is getting the supply chain in order and getting the whole visibility. And I think that's what is going to be the key. So yes, efficiency, operations, diversity, and responsibility.
And responsibility. Dr. Sinha, let me come to you now, because you talked about the opportunity that you see as far as possible privatization is concerned. A lot of state governments at this point in time, UP of course is the big one. What's the expectation now on the pace of privatization, the appetite for privatization, and how that could transform this phase of growth for your sector?
So in India, the power sector has been basically controlled by the government. It's monopolistic. Service is not at all there. I remember a few years back, we used to go to various places in the country, and seeing the way the power systems over there, the network, my belief in God always increased because it's only God who is running this sort of system. So it's quite bad, quite pathetic. A wind blows, the power system collapses. There's no customer service. You get a bill. Of course, now you can make online payment. Earlier, people used to take half-day leave to make the payment. So I think the quality of service and the cost of service has been terrible. And for many years, they have not done anything on technology. I remember one of the places that we went to the head office, and that was the place where the whole finance department. There were only papers on both sides in racks. Two people could not walk together. One had to walk behind the other. So it was absolutely pathetic. We took over Odisha Discom. There was no ERP. Nothing was there. In 2 months, we had to implement the ERP. 3 months, we implemented the CRM. So in most of the states, that is the condition. It has improved little bit, but not that today if you go anywhere, you will find that they have the state-of-the-art technology. And of course, there's nothing like data analytics and all that in these places. So that is the type of opportunity that is there for the country. There are a lot of players in the country, and there are also players who are from outside the country. And today, the world has changed because the way the power is produced, you have the ability to do decentralized generation where everyone can produce. So you have multiple people who can supply. And how do you manage it on real-time basis? Because on real-time you need to supply, and real-time you need to manage the way you source the power. So I think there is a great opportunity. This is a thing that has not happened, and I always keep on saying that we have 28 states. Only one state has done PPP. So we have 27 states where it is good, or of course, good is not the right thing. It's either bad or very bad or very, very bad. I don't know whether we can really rate them. And it's actually a great opportunity for everyone. And it's not only people who will go and run those businesses, but every technology player, globally, every technology player, you name them, they would get opportunity. Similarly, every technology player in the country will get the opportunity. So the whole ecosystem will undergo a transformation. And what will be the real benefit? The real benefit will be the consumer. We took over Odisha Discom in 2020, mid of COVID. 5 years, tariff has not gone up. The service has improved tremendously. And of course, the quality of service and customer service and all that and reliability is there. So I think the real beneficiary will be the Indian industry and the Indian consumer. Your cost will come down, you will get better quality service, and you will become more competitive globally as also in the country.
You know, Pastor, since we're talking about the future and we're talking about opportunities that each one of you are looking at, the digital rupee, I mean, that is something that MobiKwik has been betting on as well, even as we see experiments with CBDC play out around the world, including here in India. But some of the other bets that you're willing to make in the context of what's happening with AI, in the context of what's happening now with crypto, stable coins, and so on and so forth as well.
So thanks for asking that, Shireen. I think one thing I can say is that, see, we have seen the whole hype around crypto globally and also in India a few years ago. And then there's a big difference in the way cryptos have been operating. I think the fact that India took this opportunity to define its own digital rupee, I think that makes it, very different because, it's not private, it's backed by the central bank. And of course, cash is still getting used in the country, and CBDC or the digital rupee is just a digital form of cash. There are, of course, use cases where people want to do anonymous private transactions. Happening over CBDC, it's also a peer-to-peer transaction. It can also, there's no centralized switch, so it can also settle without internet for that matter. So there are lots of benefits of the CBDC approach. And of course, we've just gotten started. The central bank has just enabled few banks and few fintechs to get going. So we are right at the beginning, but I do think that the fact that it is backed by the central bank means it's automatically very, very different from how, private cryptos have been running all around the world. So that's one. Second thing, there is a lot of discussion around AI and use of technology. I should admit I was sheepish enough. I did think I'll ask Madam FM whether, technology is changing so much in banking that, all the bankers, and, I've been working in financial services now so many years. I was just thinking also that should we have the education system also include technology classes? Because, sanctioning budgets or finding vendors to build things is very different from, appreciating how this can really impact the internal workings of my business and therefore also bring efficiency. So there was just one question I wanted to ask, but from an AI perspective, I can tell you what we are trying to do. One of the innovative and experimental products we showcased recently at GFF is called Say to Pay. And essentially it's making a payment while speaking, almost like when you're driving and you're giving Bluetooth commands that make a call to so-and-so. And, we've built it. It's not for production use and it's not yet, approved in a regulatory sandbox. It's just experimental. But one of the reasons I'm interested in that is the ramifications, because while a large part of the country is banked now, in terms of active digitally paying users, that number still hovers around 500 million or thereabouts. And language is the barrier. And so when you use AI to make this simple, it can work in, Hindi, Punjabi, Gujarati, Telugu, Tamil, and it can make life very, very easy for people who don't, they have apps, they have a phone, most apps are in English, but this can make their life easy because money is different from, ordering groceries or ordering food. Money is money. People are either paying someone or saving money. So I think that is something that, I'm interested in from a future perspective. All the other applications of AI, like we built our own collections bot to make collection efficient. And not necessarily cost efficient for the company, but also for the customer. So for example, typically, there are Autobots calling customers. And let's say, it's found by calling a person many times that this is not the right time to call them. The right time to call them is, let's say, on a weekend or late in the evening or early morning. Then that AI bot is now learning that I should call at this time. And so it's making it efficient and easy for the customer also. And I do wish that, after COVID, there's so much digitization has happened in banking in India. I do believe that there is a lot of opportunity for more technology and AI to get used across, the banking sector to make it cost efficient, process efficient for the institution, but also more efficient for the end consumer.
Yeah, since we're talking about technology and we're talking about the use of AI, and I think the finance minister kind of alluded to that as well. So Dinesh, let me start by asking you, what happens to people? What kind of safety nets, if any at all, are we prepared to put in place as we transition to this AI era? And what do you believe that we could possibly be talking about in the next few years? Smart factories have been around, automation has been around, but suddenly this AI world seems to give people a lot of hope and confidence. It's certainly giving the markets a lot of hope and confidence in the US, for instance. But what does it mean on the ground from a people's point of view, especially for developing markets like India?
I think I look at it in two different ways. One is that AI really supports efficiency, really supports visibility, and if I take supply chain as a sector or planning for the distribution, then I think is 100% an efficiency tool. But if you look at from a people perspective, I think the outcome or the output which they have been doing will change dramatically going over the period. I still don't believe that India will face a situation of actually reducing employment because of AI. I think it will be alternate use of the way in which we put the people to get in touch with. The second is, if I look at application and what we call agentic AI, then I think it does have an impact on people. But I think it is going to make, I would call it, ability to sell more services, to sell more capabilities across the board. So you are actually going to find more people not necessarily in operations, but in making sure the operations reach the customer in the best manner possible. So I think it will be an alternate use of people's skills rather than depriving people's skills in total. The second element is what India can offer the world. And I think that's where AI is going to make a big difference. Because we have always been, so to say, trading bodies versus bodies. Instead, you could actually be trading efficiency versus hours mapping in terms of the world. That, I think the GCCs are already proof of that. But as we go forward, you will see more and more opportunities coming, both from talent mobility, meaning making people available where people are in shortage. But as I look at most of the developing economies and the age profile, I think that's a golden opportunity for India to seize on, not only with AI, but also using AI, if I can use that.
Yeah, Anish, you know, we're also here talking about the leadership framework in the times that we live in. And so from an innovation perspective, from a disruption perspective, has the organizational matrix changed? Is it likely to be rewired given what you intend to prioritize, but also given the global headwinds that you foresee?
It has changed tremendously. Organizations have to be a lot more agile in the world today. Leaders cannot rely on their teams alone to look at technology. Each leader has to be a tech leader in themselves. And they've got to work together in much more of a collaborative manner. So these are some of the changes that we've seen across the organization.
And what do you believe could be some of the other changes that you will need to make to ensure that the organization is future ready?
Constant learning, because you talked about jobs and AI. This is not a new phenomena. Many of us grew up in an age where there was no computer. And that was a big change at that point in time. Then the web came, and then we've had multiple other advances in technology. Jobs have changed. There are many jobs that were being done before that are automated today. And the same thing will happen with AI. The difference is the acceleration. And for that, organizations have to be able to create a learning mechanism to be able to take certain people whose jobs may have been replaced by agents, to be able to give them other jobs, to be able to coach them, teach them. And the openness to learning is an important aspect. So that is a big step forward that both organizations and its people have to take.
So are you going to be changing the way that you hire at Mahindra? How you hire, how much you hire? Do you foresee that changing?
How much we hire, we expect it to go up as we grow. How we hire, yes, because we are looking for folks who are keen to learn, who are a lot more agile in how they operate. But it's not as much in folks who we hire, it's folks who we have today. And how do we give that security to folks that we are there with you and we will grow together?
In an agentic world, Mr. Sethi, you know, the finance minister was talking about people on the ground at branches needing to learn the language so that they can communicate better with the people that they service. In an agentic world, does it make it easier for you to be able to do that?
Definitely. We are already working. We have launched a program called Spark. It's a platform where it's not only the knowledge platform, I think the skill-based platform. You can even build that language-related issues also. It's a fairly large organization. We recruit from different parts of the country. And somebody from UP, Bihar work in Karnataka and Tamil Nadu. You can't expect them to immediately learn. I think some tools, if AI tools are available, definitely is going to be helpful for them. But one thing what from the conversation, any adoption of technology, particularly impacting the employees, requires a great amount of change management. It's not only that we roll out a technology, we prepare them for that, both physically in terms of the skills and mentally in terms of adopting to the changed environment. That's also a critical piece which we are working in SBI, that while we popularize digital tools, we are also preparing the people that how do we use these tools, how it will improve your efficiency and also customer centricity.
You know, we've been talking about opportunities. Let me end by asking each one of you on the key risks that you foresee for your businesses today and how you intend to mitigate those risks. Anish, I'll start with you. The finance minister talked about currency, for instance, and the currency fluctuation as a possible risk. Inflation at this point in time, of course, in India, relatively benign, and globally also we've seen rates coming off. What would you say are some of the key risks that you're sort of preparing yourself for?
The key risk that we are seeing is from a geopolitical standpoint, access to certain materials being switched off and finding solutions for them. The bigger risk we actually see is that risk we don't know today, as we've seen that things keep coming up from left field on a regular basis.
But on the mineral side, you're talking about rare earth magnets, you're now talking about export controls and so on and so forth. As we talk about self-reliant India, to be self-reliant in minerals, etc., will perhaps take much longer. So what could the way in the interim be?
There are multiple solutions in the interim, but self-reliance is not going to be that far away. For rare earths, for example, in 3 to 5 years, we should have the ability to have our own permanent magnets being made from rare earths. And it's not just rare earths. There are many other aspects of the supply chain that we've got to be self-reliant on. But the other aspect I would add as well is we've got to think about what is our strength as a country. And what are our rare earths that we can hold the world hostage to at some point in time.
What are those? What are our rare earths that we can hold the world hostage to?
We have to develop some of them. I think we have some capabilities, and they may not necessarily be in minerals alone, but it's about how we create products, how we create services, and make them indispensable to the world. That's what we need to start thinking about. To me, that is what self-reliance is.
Being indispensable to the world. Mr. Kaushal, what are the key risks outside of Russia that you're worried about today?
So I would say I'm already living a key risk on geopolitics, which Anish mentioned. But outside of that, I think there are 2 or 3 key risks to our business. If I just look on the business side, exchange rate is a big risk for us because we import 85% of crude in India. Pricing is a key risk for us because India is a very price-sensitive market. And all our products which go end up sort of being at the cusp of tolerance levels for people is very low for any price increases, or even political spectrum, the tolerance is low. So pricing risks are there. So I think those are on the business side. But there is also a bigger risk I see or a different category of risk I see. See, HPCL is a legacy organization. We are 50 years state-owned there. There is a need for all of us to change with the times. I'm sure Mr. Shetty feels the same need. And as the CEO, you always think about, is my organization changing enough and fast enough to catch those? Am I getting the right talent? You mentioned earlier about hiring the right talent, changing or grooming them differently. We get a lot of good talent at entry levels, some of the best IITs and some of the best IIMs and NITs, etc. But am I grooming them to be the right leaders for the future? And most importantly, am I grooming my leaders to adapt to this environment? Because if the leaders are not adapted, then that stifles the thing. So the human side of it, especially in an organization like ours, which is a very legacy organization, state-owned, I think that becomes an important risk, which I'm sure it can be overcome, but I think it keeps you awake on some nights.
Yes, I'm sure it does, and I think that would be something that each one of you as leaders is dealing with as a challenge. Dipali, outside of the US tariffs, what would the other risks be?
So, post-COVID, the world hasn't been the same. I mean, let's accept it. When the business was steady state, today, post-COVID, you've had everything, the Red Sea disruption to all the other disruptions. And so the predictability of businesses are not the same. So I think for us as businesses, I think the resilience and being on top of the cost is a very key thing, and being competitive as a country, because the opportunity for India is really, it's opening up all doors. India is again a huge opportunity, so I think being competitive is very important. But I think the biggest underlying is talent. And when you're deploying people, I think the biggest thing is about people, and how are you going to repurpose and repivot your teams and look at the people ahead. Because today, when we are sitting here, most of us are baby boomers. When you're talking with the millennials and the Gen Z, you're talking about the youngest population in the country. And you're talking about lot of different priorities and purposes that the new generation has. So I think for me, as we develop our India market, while we are developing our global markets, the important thing is going to be talent. India being as a competitive, being a competitive as a company. And of course, and how do you manage the unpredictability of businesses as well?
Yes, I think that continues to be the #1 risk for most businesses. Dr. Sinha, the key risks that you're preparing yourself for?
In the sector I work, I think the biggest risk is the supply chain. We talk of batteries, lithium is there. We talk of polysilicon, it comes from one country. We talk of very many materials which are used in the production of whatever we use. It all comes from one country, while we will create the resilience by having our own supply chain. There is also another opportunity of disruption. And why only today the chemistry of lithium ion has to be there? Why can't we have a disruption of other chemistries? Why can't we have sodium? Why can't we have manganese and all that?
We were listening to a Nobel laureate in chemistry last
Yes.
night. Dr. Sinha, has that inspired you on what you could possibly change to change the chemistry of some of these things? I mean, how far are we from being able to actually come up with some solutions here in India to address these problems?
So I think there's a lot of work that is happening, and there's a lot of work right through in cutting edge areas that is taking place. So you will have superconductors, you will have nuclear fusion, you will have alternate to polysilicon, new organic material. So I think the world has also understood that the normal way or the earlier way of doing things is not the only way. That is one of the ways. But if we stretch ourselves, if we push ourselves, there are many alternate ways, and if we put money in the right places, I think we'll find.
So nuclear, is that one of the alternate ways that you're going to put your money in?
Yeah, absolutely.
Absolutely. Upasana, outside of the regulatory risk, because you already said that that's number one risk, what are some of the other key risks that you're getting ready for?
So I think one of the key risks, not just for us, but all the other players in the sector, as you know, you spoke about year of the IPO, many more fintechs are coming. And so I think as we get there, we realize that, you know, all these years we've been focused on growth mindset. And now it is growth and innovation also, but also protect, defensibility, risk management. And, you know, all the talented engineers that we have in our country, you know, let's face it, they're not all applying it towards rightful purposes. So for all the amazing techies trying to build the next gen, there is an equal number of people trying to apply it towards fraud and cyber. And, you know, so these are becoming very important risks, especially for all fintechs. And I would say all the banks and financial institutions also, given the onus on digital processes. So I think this is one area where I think that, you know, I'll be the first one to admit that maybe we have not been investing enough, especially as fintech startups. And now that realization is coming to most of us that we need to do more, because you keep investing in growth, and some point you will find that, oh, I have to also protect. I can't have leaky buckets, etc. So I think that is one area where, as a country, you know, we have so many jamtaras in India, I can't tell you. We need to do a lot more to save, you know, the Indian consumers' money from those people.
Yes, absolutely. I would imagine that you agree with what Upasana just said, sir.
Absolutely,
both in terms
absolutely.
of, I mean, digital arrest has now become the buzzword. So how is SBI planning and preparing for this digital future and to ensure the safety of your consumers?
No, I echo what Upasana said. It's not only for the fintechs, even the mainstream banks are hugely exposed to this cyber risk. And cyber risk, as the digital adoption is exploding, we have two kinds of risks. One is how do you protect your digital assets, your own assets. And in an interconnected world where my customers are integrated with me, corporate customers and many other people are interconnected. So how do you protect your digital assets from cyber risk is an important element. And simultaneously protecting your own individual customers. The customer protection becomes a very critical factor. So today we run one of the largest compliance and risk teams in the country, and right up to the branch level. We also have the largest teams involved in the proactive risk management. I take pride in saying that for every digital fraud we talk about, so much is prevented through the PRM. In the last 6 months, 6 to 8 months alone, we protected customers to the extent of 13,500 crores. This is the proactive risk management activity we do. So, but it's a as Upasana again mentioned, as we improve ourselves, the other actors are also much faster adopting, and we need to really work on. And this is one area where we are adopting AI in a big way, in the fraud risk management. So just to simply answer your question, I think cybersecurity is one of the major risks the financial services play.
And the biggest opportunity is to get Anisha onto
borrow from
to
me.
borrowing from SBI. Ladies and gentlemen, with that, we are going to have to close this conversation. As you can see, there is an air of confidence here within the leaders that we've spoken to. Each one of them very cognizant of the fact that they have to focus on meaningful growth. They have to focus on meaningful profitability, which also takes people and purpose forward. But at the same time, they're mindful of the risks and they are prepared and ready to navigate the uncharted waters. Many, many thanks to each of our panelists for joining us here this evening. Thank you very much for your time and we wish you the very best of luck. Thank you very much, ladies and gentlemen, for joining us here this evening.
Ladies and gentlemen, a huge round of applause. Thank you so much, Shireen, and thank you so much to all our panelists. I would now request Chairman SBI, C.S. Sethi, to please present all the panelists and the moderator with the memento. And of course, a group photograph. Ladies and gentlemen, please a huge round of applause for all the panelists. Ladies and gentlemen, I request all of you to please take your seats. We are about to begin with our next session. Request everyone to please take their seats. Ladies and gentlemen, our next speaker is in the hall. Can I please request all of you to take your seats as we begin with the next session? Okay, that was a power pack full of energy panel that we just saw. We now move on to a keynote address that examines the evolving regulatory, market and investment landscape in India and the pathways to build trust, resilience and growth in the financial ecosystem that fortifies our competitive advantage in the truncated world order. Ladies and gentlemen, please put your hands together to welcome Shri Tuhin Kanta Pandey, Chairman, Securities and Exchange Board of India. Ladies and gentlemen, please welcome Mr. Pandey with a huge round of applause. Request everyone in the hall to please be seated because a very important session is about to begin. Everybody at the gates, can I please request all of you to take your seats so that we can begin with the next session? Everyone standing in front of the cameras, can I please request you to please be seated so that we can begin with the next session? Everyone standing at the back of the hall, request you to please be seated so that we can begin with this important session. Ladies and gentlemen, I hope you have taken your seats. We are about to begin with an important keynote address. We now move to this address that examines the evolving regulatory, market and investment landscape in India and the pathways to build trust, resilience and growth in the financial ecosystem that fortifies our competitive advantage in a truncated world order. For this keynote address, please put your hands together and join me in welcoming Shri Tuhin Kanta Pandey, Chairperson, Securities and Exchange Board of India. Ladies and gentlemen, a huge round of applause for the SEBI Chief. I would also request Shri Vinay Tonse to join Mr. Pandey on stage. And before that, we'd want SEBI Chief to say a few words to us.
Shri Shetty, Chairman SBI, Managing Directors of SBI, esteemed leaders from the government, fellow regulators, industry leaders, colleagues from State Bank of India, ladies and gentlemen. It's a pleasure to be here at the 12th SBI Banking and Economics Conclave. The theme, India's quest for self-reliance in a fragmented world order, truly captures the spirit of our present times. We navigate a global landscape marked by geopolitical shifts, trade complexities, and rapid technological change, all of which challenge established norms. Our journey towards self-reliance will require channelizing our nation's savings into productive investments in modern infrastructure, advanced manufacturing, and energy transition, as well as strategic sectors like semiconductors, rare earth metals, and defense. Capital markets will be crucial to fund these ambitions. There is a changing paradigm of household investments. The foundation of any self-reliant economy is its own people's capital. We are witnessing a fundamental shift in how Indian households save and invest. SEBI's investor survey tells us that investors are motivated by long-term growth, building additional income, and goal-based financial strategies. The numbers speak for themselves. The count of unique investors in our capital market has surged from just over 38 million in FY 2019 to nearly 135 million now. The number of unique mutual fund investors has jumped from 10 million a decade ago to over 56 million now. Household savings channeled into mutual funds grew at a CAGR of 24% between 21 to 25, far outpacing the 9% growth in bank deposits. This isn't just financialization, we are witnessing democratization of wealth creation. This shift has created a powerful domestic counterbalance to volatile global flows. The rise of systematic investment plans now crossing 280 billion rupees monthly provides stable capital. Individuals directly and via mutual funds now hold a record 18.8% of NSE listed firms. Our domestic strength now provides stability in a fragmented world. In the current financial year alone, equity and debt issuances have crossed 7 trillion rupees. A strong IPO pipeline indicates continued confidence in our markets. Instruments like REITs and InvITs have channeled significant capital into vital real estate and infrastructure assets. AIF commitments channeling risk capital into the unlisted space have grown at a CAGR of 30% over the last 5 years. Municipal bonds, though nascent, offer a direct route for cities to fund their own development. Nevertheless, India still remains a predominantly bank-led economy. Outstanding bank credit to industry and services stands at 91 trillion rupees, while outstanding corporate bonds stand at 54 trillion rupees. This highlights our primary challenge and our greatest opportunity. Deepening our equity, bond, and alternative investment markets is imperative to diversify and provide an alternate source of funding for our ambitions. In a fragmented world, our markets have to be investor and issuer friendly. Investors will commit capital when they believe the market to be fair, transparent, well-regulated, and capable of withstanding shocks. Our enterprises need more than just a resilient market. They need an efficient one. This is where easing norms of doing business become crucial. SEBI's role is a dual one, to ensure market integrity and to be an enabler of efficient capital formation. Let me touch upon some of the key reforms taken by SEBI. Let me see the bucket of ease of doing business. Just a few of them. Fundraising timelines. IPO listing timelines have been shortened to T+3, while rights issue timeline has been reduced to 23 days from average of 317 days taken earlier. Simplifying documentation. The placement document for qualified institutional placement has been streamlined by eliminating duplication of information which is already public. Large issuer listing. Changes have been recommended to allow scale-based guidelines for issuers to list with lower initial public float, public offer, consistent with market absorption capacity and minority shareholders' interest. Timeline to meet MPS has also been rationalized with due regard to liquidity. Anchor investor norms. The number of permissible anchor investors has been increased. Registered life insurance companies and pension funds are now included in the portion reserved for anchor investors. Let me come to the other developments as well. AIFs. We have reduced the minimum investment for large value funds from 700 million to 250 million to facilitate higher investor participation. Steps are being taken to promote the adoption of accredited investor status in our ecosystem. Corporate bond market. SEBI has focused on opening this market to retail investors. Face value of corporate bonds has been reduced to rupees 10,000. Online bond platform providers have been introduced to facilitate online transactions in bonds. RFQ platform has been introduced for secondary market, and liquidity window facility introduced to provide exit options to retail. Regulatory framework has also been issued for green bonds, social bonds, sustainability-linked bonds, etc. However, much more needs to be done to deepen this market. REITs and InvITs. Strategic investor category has been expanded to allow REITs and InvITs to attract capital from institutional investors. Classifying REITs as equity is also expected to further enhance liquidity of these instruments. Let me come to some of the measures on market integrity. Cyber resilience. A comprehensive cybersecurity and cyber resilience framework has been mandated for all regulated entities. Smaller intermediaries will be supported by NSE and BSE by setting up a Market Security Operations Center. Governance in MIIs. These are first line of defense. Measures have been taken to ensure they always prioritize public interest over commercial considerations. Stress testing MF schemes. These norms for small and mid-cap MF schemes directly enhance market resilience, requiring fund managers to ensure prudent liquidity management. Secure payment modes. UPI has transformed payments in the securities market, we all know. But the valid UPI handles and the SEBI check utility of SEBI, which we have introduced from 1st of October, has created a secure digital pathway for investors, ensuring that payments go only to registered intermediaries. Around 440 billion rupees of investor funds have entered the capital markets since October 1 through these validated UPI handles. Surveillance. Our revamped in-house systems are using AI and data analytics to generate alerts for manipulative trading patterns. We'll keep our regulatory framework for algorithmic and high-frequency trading updated to ensure fairness and transparency. Social media platforms. Digital platforms are being actively monitored for misleading content. We have escalated over 1 lakh pieces of such content to be taken down by the platforms. I have to also acknowledge some of the steps taken by RBI for the capital markets. The increase in the IPO financing limit for individuals from 1 million to 2.5 million will enable deeper retail participation in larger public issues. RBI has also enhanced the limit for lending by banks against units of REITs and InvITs while removing the ceiling of lending against listed debt securities. This will make these instruments more attractive as investment avenues. The government has also recently specified municipal debt securities as eligible for repo and reverse repo transactions. They can now be used by banks and institutions for short-term liquidity management. Their increased demand will empower our cities to fund their own development. So let's look at the way ahead. Looking ahead, how do we position India's capital market for the next decade of growth and self-reliance? First and foremost, education will be the key to ensuring responsible participation, especially as millions of new investors join the market. We are shifting from basic literacy to targeted education, focusing on market-specific risks and dealing with unregistered entities. The outcome of our nationwide survey is helping us understand investor behavior, and our outreach program will be tailored accordingly. For IPO-bound companies, the existing contents of the offer document summary will be further rationalized. This summary will also be made available separately to investor from the offer document to encourage informed feedback from them. The process for IPO-bound companies whose pre-IPO shares are pledged is being streamlined. The proposed framework will ensure that lock-in requirements are automatically enforced even if pledge is invoked or released, thereby preventing listing delays. Consultation papers for these proposals will be out soon. For the corporate bond market, our way forward will be to make debt instruments more attractive for retail. We have floated a proposal to allow debt issuers to offer incentives to certain investor categories to encourage retail participation and other rationalization measures. A nationwide education campaign to make investors aware about this market will be rolled out shortly in consultation with all stakeholders. RBI and SEBI are consulting on introduction of bond derivatives too. Strengthening the commodity market is a priority for SEBI. We will work with RBI towards a regulatory framework to enable prudent institutional, where banks, insurance companies, and pension funds could also participate, prudential institutional access to the commodity markets. A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is currently also under examination. In closing, financing India's future in this complex global environment is a shared responsibility. SEBI is committed to being a responsive, forward-looking regulator. We value the insights of all stakeholders present here today, policymakers, fellow regulators, industry leaders. Your partnership is crucial as we navigate the path towards a $5 trillion economy and beyond. Let's work together to build a capital market ecosystem that is robust, inclusive, and truly fuels India's quest for self-reliance. Thank you. Jai Hind.
Thank you, sir. Thank you for those encouraging words. Now may I please invite on stage Sri Vinay Tonse, Managing Director, RBNO, State Bank of India, to moderate this session of Q&A with the SEBI Chair. Ladies and gentlemen, please give him a huge round of applause.
Good evening, everyone. Good evening, everyone, and Mr. Pandey, thank you, sir, for making it here. Despite I know that you had a very, very busy schedule today. Thank you very much for making it here. As we were entering this hall, you were asking me how was your experience, getting out of the bank into the mutual fund, SBI mutual fund, and again coming back. And whatever you were just alluding to in your comments, one of the things that strikes me is that when I was there, we were talking about mutual fund sahi hai. और इतना strongly वो हो रहा था कि when I came back to the bank, I was finding that all my deposits were going away into the mutual funds. And then now we have to start that कि banking भी सही है, mutual fund तो सही है तो definitely. So that was the period when we saw a lot of this shift happening towards what you were just mentioning. And in that context, sir, I just start with I will have some questions which I have for you on my own, and then we open up because there's a lot of demand coming for asking questions on many requests. So before opening up, one particular point, sir, democratization of wealth creation is what you just mentioned. And if you go back a few years, around maybe 2014 or 13, when originally the definition of financial inclusion had come, there were actually three pillars. One was Jan Dhan, basic access to formal systems of banking. Second was Jan Bima. And the third was Jan Nivesh. The first one, PMJDY, through the PMJDY, we are aware of what sort of progress we have made. And Jan Bima also, insurance for all by 2047, I think we are strongly in that direction. Where would you place Jan Nivesh, sir? Like taking capital markets, access to capital markets is what the original definition mentioned. How far are we, or are we on that direction? You are talking about outreach, you are talking about literacy, education. Where are we on that?
It's a very good question. Also the fact that, Jan Nivesh has to be also understood in terms of more holistically, in terms of balanced portfolios. And I think we are, many a time, we are only looking at segments like the banks are looking at, there's a certain amount of money, the people should be having a fixed income portfolios. Fixed income portfolios could be a bank as well as the bonds. And there could also be, insurance and pensions and there could be then some certain allocation for commodities maybe, and as well as the securities and the mutual funds. Now, I think this is the more holistic education that eventually we should be able to do, rather than a very segmented way which we are there, like you are saying, mutual fund sahi hai, bank sahi hai, सब insurance भी सही है, pension भी सही है, actually सब कुछ सही है. So basically, what we have to really bring in a concept of, the overall asset allocations for every individual's suitable to its own, life, and also suitable to a certain point of time in which they are. I think we are, to some extent, a distance away from that holistic education, because each one is reaching their segments. Although we have a National Center for Financial Education, where all the regulators have come forward and created an organization, and under that organization's umbrella, a number of awareness programs and outreach programs are undertaken. But we need to do far more, given the size and scale of our country. So one important thing in relation to the securities market, we had actually, along with our ecosystem, securities ecosystem, we commissioned a study, a very large study, a survey, of which we released it a couple of months back, and it's out in the domain now, public domain. And that survey brings in a lot of points, at least on how the people are looking at investments, particularly in relation to the securities market. And we found that, there's only 9.5 souls are currently invested in securities market. 63% of them are aware of the securities market, that some kind of understanding of stocks or mutual funds. 22% of the remaining, out of those 9.5, if you exclude, and the rest remaining, and 22% of them, which is actually a very large number, they were intending to come to the securities market within the next 1 year. That means next 12 months, which is like a very, very huge responsibility. And 36% of the households has had some fair knowledge of the financial markets, of the securities market. So in terms of outreach, the people who were surveyed, they were really giving us a lot of clues on how would they like to be approached upon. Now, there is a lot of generational change. Elder generation will think differently. Maybe they would like programs to be more like one-to-one, personalized. But younger generation like short videos. And so we got those kind of granular details as well. In terms of language, we had only 5% was saying that they would like to be educated in English, and 47% were wanting to be educated in Hindi. Then we have 7% in Tamil, and then Bengali, and Telugu, and Marathi, and Asmi, and Odia, and Bengali, Nepali. Now, we have to now go back into the into the languages, getting to speak to the people in their language, and also then bringing down the correct messages. So not nearly only from the point of view of our own promotion of a product, but actually promotion of this concept of a balanced portfolio, where you are mixing, it's not everything should be in equities, not everything should be in fixed income, but a mix, and having balance and having a good idea of pensions and insurance needs as well. So we should actually, regulators put together, should put kind of this campaign on a much larger scale. But yes, in terms of various other measures that we need to take on respect of securities market, we have right now SEBI versus scam. Last 2 months, 3 months, you had this campaign where every part of the ecosystem, SEBI's ecosystem, was talking about how to prevent scams and some of those scams which are there. And within that, actually, a very important initiative like validated UPI handles and SEBI check, which is 30-second, you can check whether this account is fraudulent or not, in terms of valid or not, in terms of securities market. So therefore, there's a very important piece of work which SEBI and its ecosystem and the banks and the NPCI have done together in order to provide a systemic support or a shield against the cyber frauds.
Thank you, sir. Sir, all of us, any player in the ecosystem in India, the financial ecosystem, keenly watches what the SEBI does and what the SEBI says. So all of us are also very appreciative of the fact that so many initiatives have been taken towards ease of doing business, and how do we tap the fundamental shift which you alluded to in the behavior of savings. I'll qualify that, behavior of investing from the thrift part. I think it's very, very laudable initiative, many initiatives. Which among these initiatives do you think, personally, is the most critical, and what do we get to see in the next, say, 6 months or a year, which you would feel is extremely critical for this?
So I think on fundamentals, what are the SEBI's roles? The Parliament has given us 3 roles. 1, investor protection. 2nd, market development. 3rd, market regulation. So how do we really balance? And not each one of them is not really mutually exclusive. In many cases, these are intertwined. Maybe a good market development also involves essentially investor protection and market integrity in one sense. So, but we need to be mindful that, we have investors on one hand and issuers on one. We are only facilitator of capital formation. And therefore, we need to work on investor protection at certain stage. And investor protection also, we have to see, one size doesn't fit all, because there are different risk profiles for different types of investors, and there are different types of products which have got different risk profiles. So therefore, we cannot have one size fits all approach in our regulations on investor protection for different risky products and different types of people who can take risk. That's one point where we need to have a balancing of regulations. The second is market development. If we do not have REITs and InvITs, then obviously a great deal of capital formation which could come in terms of infrastructure and real estate won't take place. Today, it may not be necessary for you to actually buy a real estate if you get a fraction of it, which is actually a REIT is, and then get that relatively stable flows of rental incomes to this thing. Same thing applies to InvITs, where a lot of capital formation can take place through rolling of investment, through asset monetization, the people building assets and then forming InvITs and use those collections to build further infrastructure. It's very important for things like NHAI or other agencies which have to build large-scale infrastructure to raise money. But market development would also include several other products. In derivatives, for example, the different types of needs of hedging, and both on commodity side, on forex side, on interest side, and RBI and SEBI to that extent will have a lot of role to play going forward in continuing to provide different opportunities for hedging. Now, market development also involved, developing some other different products. For example, AIF industry. Now, AIF deals with a certain different segments of risk and investment. Now, the third pillar, which is the pillar of market integrity, that actually combines the market. That is actually the fulcrum under which the whole system works. So we have now the rights of investors. We have also the duties of investors. Similarly, we have rights of issuers and we have duties of issuers. And then we could have rights of the intermediaries who support it, to bring the savers and investors together, and also the duties of those intermediaries. And therefore, the entire ecosystem, an efficient ecosystem, and whenever we keep in mind regulation, I think regulation should be the right regulation, the optimum regulation, regulation that would be actually fit for purpose, contextual. It should be also, cost effective. We should see these elements, and maybe we can build up our regulation making capacity accordingly, and also look at our previous regulation and update them or right size them or rationalize them accordingly.
Thank you, sir. So just one more question from my side before I open it to the participants today. Sir, we have seen rapid transformation of the Indian capital markets of late, and technology has been behind it. Of late, you have also spoken about the disruption or the apprehensions that can come out of such technological disruptions. Do you have anything specific in what is it that gives us the anxiety?
I think there is nothing to feel anxious about it, except that we must move with technology in tandem. Technology is a great enabler. Technology can also pose a threat in terms of if risks are not managed properly. So therefore, we have to just go on with this. Like, for example, the algo and algorithmic trading and HFT trading. This is actually a fact of life. And it has been enabled in a certain way with certain guardrails. And accordingly, I think we have to keep on saying that with every technology also comes, or every innovation also comes accountability. So therefore, it has to remain together, and the regulators need to work with industry and the technology players to always keep our technology updated. However, I see that, in some ways, we have some important things to note from the quantum computing, because that will be a fair amount of, I think, could be disruptive, very disruptive, if we don't take the necessary measures well in time. And I believe that in India and in SEBI particularly, we would be emphasizing a lot on the necessary preparatory steps which need to be taken to be in readiness to do the post-quantum cryptography in a manner where our systems function smoothly.
Thank you, sir. I now open up time to the audience. Yes, sir.
Yeah, good evening, sir. You mentioned about commodities. It's something which I'm very passionate about personally as well. Could you, sir, elaborate on what really we are looking forward to? Because it is one market where there is a lot of hope and where there is a lot of need, but that market hasn't really done as well in India as it should in terms of offering the ability to hedge for all the participants. So, sir, what is the plan SEBI has for deepening and expanding this market?
Which market, please?
Commodities, sir.
No, I think commodities market in India are definitely not as it should be, given the India's size. We know that in many jurisdictions, commodities markets are even bigger than the equity markets. And commodity markets we have, of course, one peculiarity in terms of the division of powers between the states and the center. The cash markets, the spot markets in commodities, agriculture, and many others are with the states. And we can only do the derivatives. In many cases, we have the farmers' needs, which are not exactly derivative oriented. They would like to, when they bring the goods, when they bring their produce, they would like to be paid for immediately, which is actually a spot. And but then we will say that, okay, we'll pay you in future, and you build up a future market. Future is something which we can do. And then we have also issues regarding if you have to take a delivery, then you have different places. There could be godowns or warehouses in different jurisdictions, and then we have to settle the GST issues as well. So there are some critical issues which need to be settled. So we have created a working group for agriculture commodity derivatives, which are now looking at all these issues, and once this report is there, we should be able to carry it forward, take it up some issues with the government to resolve, and also some of the issues which SEBI can resolve, and some of the issues which the industry and their industry participants can resolve. And then you have non-agricultural side, which is also fairly big, and you can have several kinds of contracts which can come in. If you see that, you know, even the base metals, we aren't really doing in every base metal as well. We have lots and lots of potential on industrial products which have not still in our horizon here, and which means that a lot of education is required because industry has to come together along with the exchanges to develop those products. As such, I think SEBI would be proactively working with the commodity market participants to expand the number of products and all that. In electricity derivatives, recently we have gone into exchanges are doing it. There are other opportunities in electricity derivatives. Could be, for example, contract for difference, CFD contracts, which could actually propel the markets to do that. There could be virtual power agreements. So electricity is one area where, again, a big potential is there for the market-based price discovery, and therefore indicating the capital formation and taking capital formation accordingly.
As an extension to what Pragangad asked in terms of commodity derivatives, it is also important to work with RBI. Today, banks are not permitted to do anything to do with commodity derivatives. While we have a lot of demand from our customers, very fairly large corporates dealing with both the non-agricultural commodities which you mentioned, particularly on the metal side, coke, and many things what they import. They're looking for some derivative products. Today, banks write the largest forex derivatives, whereas we are virtually absent on the commodity side because of the regulatory restrictions. Probably when you are working on exchange-based deepening of the derivative markets, I think it is important to work on the bank side also.
No, it's very well, because I think if you would have noticed, I specifically mentioned in my address that we will be taking up with RBI to encourage banks to get into the commodity derivatives with whatever guardrails, etc. But prudently, but yes, it's important that they can also get in there. And also that we have, when we look at the commodity the foreign exchange exposures, we are more, like from the SEBI point of view, we say that you should state, the listed entities should state the exposures in their balance sheets and what are the foreign exchange exposures and commodity exposures. We do have certain penalties if you have exposures which are not hedged. And so therefore a lot of people on the foreign exchange side do go and hedging because there is a higher capital requirements. But the similar thing is not true for commodity exposures. Commodities also important because in India, sometimes we are a very large user of commodities, but we are practically only a price taker. We don't determine the price. Nothing is there. We're still talking of London or some other foreign markets for commodity pricing. So it's important because, the size of the market, the depth of the market has to come before we can do that. It's an important thing.
Good evening, sir. Your speech is very impressive and interesting. Rather in morning gatekeepers meeting and as well as now bankers event. Sir, I have two questions. One, why SME is becoming...
I hope I don't end up in only making speeches. We also do something.
No, but it's very interesting. I have two questions. One, why SMEs are becoming NPA? Because corporates are not paying on time. They are searching many avenues for a delay for the payment, number one. And second thing, why more SMEs are not listing on the SME stock exchange? maybe because of the fear or maybe because of not given the proper attention. Is there any plan from the SEBI? Because I had advocated to start this SME stock exchange in 2008 onwards during the SEBI, Mr. C.B. Bhave. So currently around 1200 companies, our companies are listed and around 180 companies gone to main board. So is there any plan by the SEBI where encouraging more, because we have a 7 crore MSMEs in India. In that at least 1 lakh SMEs can listed on the SME stock exchange to enter in capital market for alternative finance to reduce the burden from the banks. Do you have any plans particularly to encourage more SMEs using the particularly fair business practices, good governance, and of course to enhance the manufacturing activities in India to march toward Viksit Bharat? Thank you.
I think the SEBI has enabled for a long time the SME IPOs, and in fact the exchanges were enabled to do that IPOs themselves, and these need not actually come to SEBI. They don't come to the SME board IPOs. Their offer documents, etc., do not come to SEBI. It was basically intended that SEBI probably cannot process all that stuff, so that number, and they can do it better with the exchanges. But there have also been, while several successful SME IPOs have been done and many companies are doing, this is also, there have been also some egregious behavior through the SME IPOs, and not necessarily, I would say that only at the instance of SMEs themselves, but also some of the market intermediaries who are supporting the IPO, namely the merchant bankers, where, number one, what's the cost of issuance? It's very important. If you're going for 20 crore, 30 crore raising of money, what is the kind of charges you are paying for the intermediation? If it is too high, it is, I think, better that SME does not approach it. So what is the real value of market? It's very important for SMEs to organize, and certain size has to be there. I think very tiny size coming to the capital market will not be actually cost efficient. The second, there has been also egregious behavior we've noticed in terms of people actually doing a scheme, many of the people doing a scheme to siphon off the investors' money. Now that will actually put a very bad name to SMEs, and it will also spoil the name of several other SMEs who are very hardworking, who are doing all that stuff. But just because a few IPOs have gone wrong and the people are having a lot of apprehensions about that SME. So it is important that market integrity is always maintained. While there could be a certain amount of business risk inherent in any business, but once you raise a money for an IPO, you obviously cannot divert the money if it is not for intended purpose. And you can't really spend from general corporate purpose huge amount of money. And certainly you cannot use the money and roll it through different accounts and siphon it off. There have been cases around that. I'm not saying, I'm not stereotyping, I'm not generalizing. I'm only saying that we have to tread with caution in terms of bringing credibility to SME IPO market, and some measures, for example, SEBI had to take in order to dissuade, because earlier profit was not also there. And now we said a certain amount of profitability, certain number of years in the last 5 years, you should be profitable. You should not be able to do so much of money for only general corporate purposes and so on. So this was also brought in. So I would say that we should take a balanced line. Definitely there would be a lot of scope for good SME IPO. But I would like to sit with SME associations and others and exchanges and banks and to really work out what is a kind of model which we can have. What could be a cutoff point at which we would say that it will be viable for the companies to come and list, and also what could be the safeguards in which we will continuously maintain a certain high level of integrity into this market.
Thank you very much.
Good evening, sir. Taking a clue from what you have just mentioned, sir. So SME IPOs are very attractive when it comes to the investment point. And there are several investors who are first-time investor also through IPO. So, sir, whether SEBI's, in some of the cases it has been observed that within few months or within few days, the prices of those shares gone down like anything. And investors' interests are not protected, those who are first-timer or those who are new. So whether SEBI is thinking of some kind of initiatives protecting the interest of those investors, maybe some period, 3 months, 6 months, because it is all about the valuation. So there has to be something wrong with the valuation of the company. That's why the share prices crash like anything. So whether SEBI is thinking on those lines, protecting the investors' interest or not.
I think this valuation, if you say we are actually into a free market, so it's very, very difficult when we say that, you know, the pricing is free, people are able to value each other. SEBI has typically concentrated on disclosures. You have as many disclosures, and therefore we would also now, if you know, we find that there is only 30, 40 pages you have to do, so maybe we are also saying that we will have the highlights also being offered. That's what we are working, and we'll have I referred to that. We'll have a concentration paper, an additional document which is very, very small, where the investors can easily look at it. But भेड़ चाल नहीं चल सकती, क्योंकि आपको as an investor मेहनत करनी पड़ेगी, आपको कुछ पढ़ना पड़ेगा, कुछ देखना पड़ेगा. और दूसरा, हमको जो हमारे जो अनसॉलिसिटेड टिप्स आती हैं, जो कि उसको पंप कर देते हैं और लोग उसके बहाव में बह जाते हैं, तो दिस इज़ वेयर हमने 1 लाख ऐसे कंटेंट को निकाला है जिसमें कि लोग स्टॉक टिप्स दे रहे हैं, किसी के बारे में बात कर रहे हैं, और उसमें उनका क्या इंटरेस्ट हो सकता है. तो सेबी ने ऐसे केसेस भी पकड़े हैं जिसमें ऑर्गेनाइज पंप एंड डंप है कि आप 10 लोगों को ले आइए और वो आपके बारे में अच्छी बातें करें, आप स्टॉक को बढ़ा दीजिए, उसके बाद प्रमोटर्स ही उसको स्टॉक में अपने आप को सेल कर देंगे और रिटेल के पास जो दूसरे इन्वेस्टर्स हैं उनके पास आ जाएगा और फिर स्टॉक प्राइस गिर जाएगा. तो इस तरह की स्कीम्स भी सेबी ने पकड़ी हैं और बहुत सारे ऑर्डर्स हमारे पास हुए हैं. सो अब इतनी बड़ी मार्केट है, उसमें एग्रीजियस बिहेवियर एंड ऑल दैट. ओनली थिंग इज वी हैव टू सी हाउ वी आर एबल टू, एंड देयरफॉर इट रिक्वायर्स अ लॉट ऑफ इकोसिस्टम अप्रोच, कि जो मर्चेंट बैंकर्स हैं वो कितनी ड्यू डिलिजेंस कर रहे हैं ऑन प्रमोटर्स क्रेडिबिलिटी, क्या वो ये चीज़ें देख रहे हैं कि जो इंटेंडेड पर्पस के लिए पैसा जा रहा है कि नहीं. इवन वी हैव नाउ आस्क एक्सचेंजेस, दे आर ऑल्सो डूइंग सम फिजिकल इंस्पेक्शंस टू डू इट, कि आप देखिए कि जाके वहाँ पे जो क्लेम किया गया है वहाँ प्लांट भी लगा है कि नहीं लगा है. सो I think we have to continuously monitor the situation, and constantly our efforts should be to promote good business and catch hold of the, you know, scoundrels and punish them.
Hello, sir. So India being mostly like a saving-based economy, and in the last few years we can see like the under income tax, the government is offering like income taxability on the income and disallowing various deductions. One of such deductions was under ATC, wherein we used to get benefits for investing in the mutual funds. And basically, as per the new taxation, the government has actually led to having a higher fund flow in the hands of the youngsters who are earning a good chunk of money. So how are we planning to get these funds into the system, wherein the youngsters will be like given some sort of benefit under the taxation to invest in the mutual funds?
देखिए, जो नई टैक्स रिजीम है
उसमें तो वैसे ही 12 लाख तक आपको कुछ देना नहीं है टैक्स, तो वैसे ही सरकार ने सबको टैक्स दे कर दिया। तो जो नई टैक्स रिजीम के हिसाब से आप अपना डिसाइड करिए, हर चीज़ आप टैक्स से क्यों जोड़ते हैं? You ultimately you have to calculate what returns you are getting. So this whole approach कि there will be a lollipop and then only I'll do that, उससे तो हम 5 ट्रिलियन 10 ट्रिलियन इकोनॉमी नहीं बन सकते, क्योंकि इधर की पैसा सरकार का पैसा ले दिया आपको दे दिया, उससे तो कोई बात नहीं बनती। एक्चुअली इकोनॉमी में पैसा जनरेट होना चाहिए, आपको रिटर्न मिला, सरकार को तो अपना पैसा चाहिए in order to do the infrastructure and to do all that stuff that we have to do. So therefore I don't think that approach is trying to really spoon feed you in order to say that you will get this concession, so you buy an insurance, you get this concession, so you do that. This kind of an approach has already been done away with. The question is, the youngsters today, they are not really looking for this. In general, they would be looking for their own, they are much smarter. They look at their investments. Yadi log after this regime also, if money is not staying with the banks too much in the saving banks accounts and quickly it is going into investments, तो लोग कुछ सोच समझ के investments कर रहे हैं, उसमें बिना टैक्स के भी तो investments कर रहे हैं।
Hi,
We will have one last question from the audience, please.
Hi, sir. Am I audible?
Yes, yes.
Okay. Firstly, thank you, sir. In the sense, SEBI has done a commendable job, in getting out reforms and changes for developing the REIT market in India. The way you actually mentioned from a household perspective, it's important that you have a diversified portfolio for savings and investments. I think it's also imperative that a product like a REIT, which is still nascent today, also has a diversified source of borrowings. As most of us in the room are aware, REITs are actually pushed into a corner that they can borrow only from the bond market today. They are not permitted to borrow from banks. If you look, if you step back and look REIT as a product, it's far more safer, it's far more stable than any other, listed real estate company. And if you actually permit banks to lend to REITs, it will be a win-win for both the parties. And in summary, it's the end investor who's actually going to gain, because having a large, issuer base like REIT being dependent only on the bond market is also not a good idea. So my only request would be to, whenever you're actually raising this with the other regulators, this is one topic which you should also consider. Thank you.
I think our governor is very wise, and he is taking all the steps necessary to relook at the constraints which are binding the banks.
Thank you, audience, for all these questions. Sir, but before we close this, I have one question. Last week we had a consultative paper on the corporate debt market, securities, and we have been hearing for a very long time, almost now 15 to 18 years, if I recall, about how do we deepen the corporate bond market. And many times, we seem to be going somewhere, then again a few steps back. But this consultative paper I thought was quite good because it is looking at both sides. One is the retail side, one is the demand side, and one is the supply side. So how are we incentivizing the retail to get into this, which would be a good move considering the shifting of, or rather the financialization happening. And then on the other hand, also reducing the compliances. So do we also have any thoughts on getting the lower rated issuers into this, because that's been a long-standing demand. Any thoughts on that, sir?
I think you guys can actually advise us better, and I'll definitely put you in one of the committees to see how the corporate bond market can be really kicked up. So we know that there are some issues. One is that, compliance burden, etc. We will look at it, in some respects, for the
bond issuers and equity issuers we have actually equated, including the intermediaries, those who deal with the bonds and those who deal with the equities. We have to some extent, in SEBI, we have just borrowed it from equity and put it on the bond. I think bond is a different thing, and we can have a much better, much less complying thing for the people who are dealing with that. But actually, bond market in India is still, a lot of OTC market. It is like telephone market, because it's a big institution, and some of you are there in this room. Some of them are connected through VCs. Most of them you are doing in OTC market. Now, OTC market, what we have done is to bring you to the EBP and at least say, okay, you bring and do some price discovery there, but volumes are not coming up. So that is one. Secondly, since there is the SEBI is saying that you please take the ratings and please come to all kinds of bonds. So SEBI is not as a regulator. We aren't saying that you only go AAA rated or AA rated. Why aren't those bonds coming? Why aren't those bonds, being subscribed to, being demanded? One of the reasons is that, the people who are there, in at least in terms of equity, you have, 130 million investors, and, equity culture is much, much more advanced. But knowledge about bonds is still very less among general public. And also, we haven't really done much work on educating them about it, on bonds. Because typically, it has remained a OTC market between institutional market, between big players. And unless and until secondary trading comes in, and one of the reasons we said that bond derivatives can do is to encourage it. But there would be a lot of secondary trading which needs to take place, where the people can say that we are not holding to maturity, but we can get out early and, anytime we want to get in, and any type of thing, the whole yield curve. So we have to really keep working on this to improve the secondary trading in the market, so that people have liquidity and the people know that if I'm holding a bond, I don't have to struggle to find out a buyer. To some extent, this OBP, which is again an initiative which SEBI took after the market was already happening. Since the market was happening, people were really doing it, and therefore we brought in a regulation and to give it a more credibility and more to orderly development, where through OBP, at least the people, the 10,000 rupees money, they can go and find a bond in the OBP platform. And then for having the NDS OT market to get the individuals to buy a GSEC, our effort has been, because instead of every individual going separately to the, RBI direct, it can also move through the brokers to that, the market, so that, you are able to maintain a common portfolio. And I think with the RBI's efforts, at least that part, what we call phase one, we wanted to be on exchanges, but right now it could be, the GSEC being traded through the brokers to the platform, RBI's direct platform. So we have to create more and more depth in the market in terms of both the kind of categories of bonds which are trading, and also the number of players and different kinds of players who are going and placing their investment demands on the bond market.
Thank you very much, sir. And again, my thanks on behalf of the chairman and all of us at State Bank of India for your very insightful keynote address, as well as your very patient and elaborate responses. So ladies and gentlemen, that was Mr. Tuinkant Pandey, who had to keep aside a few of his other meetings to be here with us in person. Thank you very much, sir. Gratitude.
Say, Mr. Pandey, thank you so much for that enlightening session. Now, may I please request Chairman Sir to come on the stage and present SEBI Chair with a green certificate. The applause should not stop. Ladies and gentlemen, please put your hands together for the SEBI Chairman. Ladies and gentlemen, please take your seat because the next session is about to start. May I please request everyone in the front, please take your seats because we are about to begin with the next session. Everyone gathered around the hall, around the gates, and in the front of sofas, please sit down, please have a seat. We are about to begin with a very important session. Requesting our media friends also to please sit down. Don't stand in front of the gate. In the front also, may I please request, gentlemen, please take a seat so that we can begin with the next session. Now, our next address focuses on the evolving future of the financial services in channeling resources, financial deepening and digital inclusion, enhanced credit delivery, protection of the customer, and pioneering role of the banking sector in an expanding economy. For this special address, I would now like you to put your hands together for Shri M. Nagaraju, Secretary, Department of Financial Services, who's joining us virtually from New Delhi. Please, a huge round of applause, ladies and gentlemen, for DFS Secretary M. Nagaraju. Over to you, sir.
Thank you. Good evening, ladies and gentlemen. Mr. Sethi, Chairman SBI, and the MDs of SBI, Mr. Ashwini, Mr. Ram, and Thonse, and all the board members of the Mr. Ram, and all the board members of SBI, and all distinguished participants. I think it is an understatement to say that I'm delighted. I was actually very happy to be with all of you today evening, but for my unavoidable engagements here, one with the Parliamentary Committee, the other with the Chief Justice for a selection meeting, I could not join all of you. But I hope since afternoon you are all of you having good time with the FM being there, I think now SEBI chairperson has addressed. Let me, I think, begin talking about the vision of Viksit Bharat 2047, what it is like, how actually financial sector could contribute to the goals of Viksit Bharat 2047. The Honorable Prime Minister has mentioned repeatedly in his public communications. You know, to reach the broader goals of Viksit Bharat, to reach $30 trillion and between 20,000 to 22,000 per capita USD in 47. You know, we have actually some statistics we have. We actually calculated how much is the outstanding credit to be delivered for the non-financial sector to meet the target. Now that is that comes to almost about 40 trillion. So about 40 trillion of outstanding non-financial credit would be required in 2047 to reach the Viksit Bharat goal. And what does that actually mean is that the outstanding credit, actually credit has to grow an average of 13.3% annually to reach in 2040. And then the GDP, and the GDP is the 30 trillion. Also, it has to have a CAGR of almost 9.3. Now, that is a challenge for the entire country as such, not just for financial sector, but entire Now, the other thing, which is now, all right, we are assuming that we reach 30, we reach credit to GDP ratio 39 trillion. Then to provide that amount, how much actually banks will be requiring capital? The banks cannot actually do on their own. See, the incremental growth, that may not be actually adequate to meet the goals or aspirations of the country or the government or many of us. We need to assume 1.5 of the CRAR. It is about a little more than $4,000 billion. That is the amount of money required to support 30 trillion the GDP and almost 40 trillion of outstanding credit in the country. Now, if you assume little more, little higher than the regulatory requirement, if you assume 14%, we will be requiring more than 5,000 billion USD to support that vision. Now, I think all of you know that the deposits and borrowings accordingly have to grow. And these are the, now, what are the basic things which we need to, how do we achieve this vision? When we look at it, of course, we have been talking about it at the time 2047. Some of our banks will be the large banks, very big banks. And we also hope, we aspire that at least a few of them will be top 10 of the world. Then, not only that, that was the vision also demands and requires that we have to consider certain other things, like new bank licenses we require, because imagine the providing 39 trillion at 2047. Imagine the number of bank branches we require, institutions we require. While that by the time, I don't know how many of will be there 2047, but most of the credit offtake should be happening through digitally. And a large amount should be happening. But even then, we may be requiring new banks. Banks that actually meet the needs of different segments, different industries and populations. Then how do we get this new banks? I think, of course, all of us know we have 2-3 ways of having the banks. One is, of course, the NBFCs are there. We have many large number of NBFCs are currently available. Some of them could always be thought of. The other is small finance banks is there. That is also possible. Some of them actually possibly graduate into the universal banks. The third thing is, of course, is the digital. In fact, we have not started, but if you look at some of the applications that is currently happening in the large banks, like SBI, full suite of services are provided through digital means. While it could be independently, it could be there a digital bank, but most of the banks are going to provide the digital services. So this is also one way of looking at it. Now, what are the other things which is required to achieve Viksit Bharat goals? I think all of us talk about this, the higher credit provision to agriculture, MSME, and these are the two things which will require to provide. To that, I actually add third point. Third, priority, education loans. Education loans, any child that is admitted to college should be able to get education loan, so that actually will be a ladder for aspiring higher standards of living. In fact, that's how people graduate into middle class or upper middle class. In fact, our education uptake is very low compared to many, many countries. We need to do that. Imagine the country's population, why we are actually very slow on disbursement of the thing. Now, let me, taking this, since I have now introduced the goals of 2047, Viksit Bharat, and what financial sector need to do, let me actually begin by congratulating the SBI for reaching today 100 lakh business. I think this is a great achievement. It's actually one of the very good days of the Indian banking sector as such. One of our own banks reaching that kind of level is not only a matter of pride, but also shows our commitment to ensure that we can actually remain one of the best banks in the world. Let me also say that about a month ago, SBI also declared as the most consumer-friendly bank in the world by the magazine in Washington, D.C. I think chairman has received that award also. I think this is all actually top speaks. While I speak SBI, it also shows our overall general, the banking, PSB's health and strength. And each of us actually are doing very well. Let me tell you why I'm saying this. In fact, last week when I spoke, I told that the NPAs, the net NPAs of scheduled commercial banks and the public sector banks declined, let's say, almost 8% in 2018 to 0.52. Now, after the results are out for this quarter, you know what has happened? It has declined from 0.52 to 0.45 for all the PSBs. And that's it. The secular decline, this is one. Let me also tell you, gross net NPA again declined from this also declined to 2.30 now, compared to 2.58 in the March 2025. Again, same thing. Now, if you come to the net profit, you know, this net profit for the quarter ending last quarter together with SBI declared, I think is, of course, you have the lion's share. 93,675 crores. Huge. That is increased by 9.5% compared to the previous quarter. Now, quarter by quarter, all the PSB bank actually doing very well. That shows that the quality of leadership we have and the kind of board, the effective role the boards are playing in being very professional, and also the kind of systems we have, both assurance and credit analysis systems we have put in place to ensure that our financial institutions are actually performing well. So, huge congratulations to everyone. Now, coming to we are just talking about certain things about the IBC. I think all of you know, the IBC, even before when the IBC has resolved large number of banned assets, even before going to the IBC, we also resolved, the banks have resolved almost 13.78 lakh crore as on December 24, even before going to the admission to corporate insolvency resolution process. That, while that speaks for the IBC, indirectly the success of the IBC, but it also actually speaks about the willingness of the banking community to resolve the disputes with the debtors. That we are willing to take risk, we are willing to take the decisions and resolve and recover as quickly as possible, as much as possible from the debtors. This kind of decisiveness in the PSBs is actually a rare sight. I think that's why we are actually, all the PSBs are doing so well. Now, I have financial inclusion. One of the goals, I think, is for the 2047 Viksit Bharat is financial inclusion. Now, we are touching about PM Jandan accounts, about 56 crore accounts. And during the last campaign we launched on the financial inclusion, I think we have a little more than 1 crore accounts have been re-verified and that became active now. But still, there is a long way to go for full financial inclusion. Now, we still have anywhere between around 300 million people who are actually not fully into financial inclusion. Our goal is to bring them, formalize their interaction, formalize their relationship with the financial products and suites, so that they are able to access all the available benefits with the financial. The other thing is the financial sector. The other thing which I actually always think about in the recent times we have been thinking about is the pension fund. You know, pension, large number of people in the country still are without any formal risk coverage. Pension. Now, most advanced, even middle income countries are having a very good, robust system of pension. Out of even the government, in any case, government provides pension for the government servants. But the non-government servants, we didn't have much. While the PM Jeevan Jyoti, PM Surakshya Yojana provides, and also Atal Pension Yojana covers large number of people, but in a limited manner. But we need to ensure the pension as an important stakeholder for Viksit Bharat. That has to be avoided. For two reasons. They should be having their own dignity, self-esteem, that they actually earn their income and they are able to meet their own needs at the old age. That's one. And the second point is the savings from the pension are used for the productive development of the country. Now, when we keep on saying that the adequate capital is not available in the country, but pension is the one sector which can actually mobilize, accumulate, and then these funds can be utilized through financial system for undertaking the development activities. Now, the insurance is again the other part of the elephant in the room. Insurance also, we are still lagging behind. And insurance sector also has to play, again, a very important role into the financial system for Viksit Bharat 2047 goals. People should have the insurance in any case, but then the savings from the savings from the policy holders through insurance instruments should be utilized again for the development of the country. Now, if we are able to do it, I think, of course, we'll be having we'll be reaching the goals of Viksit Bharat. Now, one thing I think all of us are very proud in the last few years. There is a lot of reforms that have undertaken in the public sector banks in terms of how the boards were professionalized. That's one. The non-official directors, mostly professionals, were selected, and then complete autonomy to the boards, and the way the officers in the zone of consideration for appointment as EDs were actually sent for long-term training, which to prepare them to take higher responsibilities. And then large number of officers nowadays are actually provided skilling with the different banks together. And then now we introduce, I think we all of you know, we also introduce PLI for the bank staff. I think that will act as a motivator for better performance. And then the priority all the entire banking community is giving on the resolution of public grievances. I think if you notice it, I think the last 2-3 months, I have heard anecdotal stories from large number of people. Initially, 1.5 years ago when I joined, I have always heard the complaints of people that I went to a bank branch, I was not treated properly, ill-treated, misbehaved, all kinds of things. But in the last 2-3 months, I have heard excellent positive anecdotal stories from random people I meet in my journeys or casually. When they come to know that I'm the Secretary DFS, the first thing they say is, we are now having pleasant experience with the bank branches. Yes, there are all the apples, some here and there, but overall, the perception that the public sector banks do not care for the customers, that impression is slowly going away. I think we need to work on that further to ensure that public sector banks can match any private sector. In fact, we can actually provide better services to every customer, and we treat every customer with respect and dignity. That should motivate us. Ultimately, the banks, as I keep on saying, banks are service providers. We are providing the service. Not only that, we are also taking the money of the people and keeping with us and managing that money. So unless we do that, unless we treat them, they will not be keeping our their money, hard-earned money, in the banks. Therefore, public grievances redressal, their resolution to the satisfaction of the customers should be one of the topmost priorities if we want to become a world-class bank. I'm sure we all want, I think everyone is aware, the SBI has been always occupied a place of pride in the minds and hearts of large number of Indians for a number of years, and it continues to be the pride for India, both people who are inside and outside also. And we wish that I think SBI will do well. And also I would like to thank for inviting me for this SBI, 12th SBI Banking and Economic Conclave. I would have been actually, I would have been happier to be personally present, but because of these unavoidable reasons, I could not be present. And I thank you once again, all of you, for giving me a very patient hearing. Thank you very much.
Thank you so much, DFS Secretary, for joining us virtually. We'd like you to stay for another 10 to 15 minutes to answer a few questions. May I please invite on stage Ashwini Tiwari from SBI to conduct this short Q&A session. Huge round of applause, ladies and gentlemen, for Managing Director CBNS at State Bank of India. Over to you, sir.
Good evening, sir. As you rightly observed, we would have loved to have you here, but thank you for joining us. And I'll have a couple of questions, sir, and if you permit, we will have some audience questions as well.
Yes, yes.
So, sir, just taking the cue from what you just spoke, I think the task before the banking sector is cut out. You mentioned a figure of 40 trillion of credit, and today at 182 trillion rupees, we need to grow at around you said 13.3%. So I think the chairman is already in sync with you. He's upped the guidance from 11-12 to 12 to 14%. So we, at least at SBI, we are already working on that Viksit Bharat goal. But you are right, sir. To increase this, today we are at around 4 trillion and we have to go to 30 trillion in 22 years. That's 7.5 times. Now, even if we assume the same credit to GDP ratio, which is around 50-55% now, the banking sector will need to grow by 7.5 times, the credit part of it. So that's a massive thing in terms of scale, in terms of the number of customers, the deepening, etc. Now, on that count, while the banks, the public sector banks are doing well, the private sector are also doing well, in your view, to handle this kind of scale, there is enough potential in India for sure, looking at the growth. But to handle this kind of scale, what do you think, which areas the banks should strengthen themselves on so that they're able to handle this volume and this scale?
I think, thank you, Ashwini. I think all of you agree with me. When you say the first thing, I think, is always to preserve what we have. Means whatever systems we are having, protecting them, preserving them. That's the fundamental principle. The second thing is, while we can be very dynamic, we can be very creative, we can be very transformative, but ultimately the assurance functions and the risk systems have to be in place. They are the two things I think we should be very mindful when we are growing very big. I'm reminded both Damien as well as Berkshire. You know, Berkshire has now, I think, few hundreds of billions with them now, cash. They are not investing in companies. Now, what they say is that this is a very uncertain world. And in the uncertain world, if we invest it, we lost it, we'll be doing damage to our shareholders. So they're not investing, they're actually keeping cash. And Jamid also is saying same thing. He has a lot of cash in the JP Morgan, but he is not investing anywhere. And he says that, no, this is the world is, I can't predict the world. And he is keeping cash. Now, these are the two people, I think all of us, all of you agree with me, most respected finance guys in the world. They are betting on with cash now because of uncertainty. So therefore, the banks should be very alive to the risk. It's not just blind growth or we take shortcuts or we take risk and move. No. The risk systems have to be very diligent, dynamic, and assurance functions of the banks should provide confidence both to the shareholders as well as depositors that their deposits or their money is safe with the bank. That is the fundamental thing. The second thing I actually see is the MSME. I think all of you know how much employment it contributes, how much it contributes to the total exports of the country, and we have many schemes to support MSMEs. But despite that, MSMEs still require a plethora of support systems to enable them to grow bigger. Because in any case, big companies, large companies will be very few in many countries. Ultimately, it is the smaller micro enterprises that drives employment as well as innovation and quality. Now, MSME credit, how do we do it? Now, I'm very glad. I think SBI is doing it. Now, the digital lending that SBI has started for MSMEs, I think you have now crossed almost 50,000 crores last month. So this is the one area where we should target more MSME. The second, of course, agriculture. While basic agriculture is very important, I think we should continue to support the credit through Kisan Credit Card and otherwise. Agriculture value creation, supporting agriculture value creation, like warehouses, godowns, these cold storages, trucks to carry. So this kind of a thing actually also required to be supported by the banking community. This is how the next growth phase comes. So I think these are some of the things, the next growth of the sector.
Yes, sir. Thank you for that response, sir. Actually, there are 2-3 things which you said earlier and now also. First thing, what we have to be preserved and strengthened. And I think one of the things which you mentioned earlier in terms of customer service at the branches, which is improving, but can do better, and physical setup is as important, physical touch. This is exactly the same thing the Honorable Finance Minister mentioned in the afternoon, where she said that we should not just go completely digital, it should be a mix of digital plus physical touch by people. So I think that's very, very important, and I think your focus on the assurance function is equally important. I mean, we all talk about technology as a great enabler. Well, that is there, but it has to be supervised, and assurance function have to keep an eye on whatever risks are developing. So that's really important, sir. On agriculture SMEs, sir, as you are aware that not only SBI, but public sector in general is growing at almost 15-17%. So that's a good story. Better than the corporate side, sir. So therefore, hopefully we will continue this. In terms of your earlier statements about niche banks, you mentioned that while banks are becoming larger, and there are also plans, maybe they can become even larger as per government plans to come into top 10, top 20, but there will still be a requirement of niche banks to take care of niche requirements of community, etc. Sir, can you elaborate on what you mean by niche requirements which might have to be done by niche banks?
No, I meant niche bank means, I think niche banking has a very wide meaning. I think all of you know that innovation increases probability if you are focused. And, my sense is, I have my experience in US, and I've seen some of the banks in the US specializing in certain products and specializing certain line of business. And even in India, South India, there are banks which are known for earlier in Karnataka, Tamil Nadu, Andhra, there are banks which are well known for supporting agriculture or supporting industry and or MSME. There are examples are there. Like similarly in Germany, the German community bank support MSME. In fact, in Japan, SMBC used to be known globally for their support for MSMEs. Now, similarly, there could be, we have now, let's say, NABARD refinances for agriculture. SEBI again refinances for MSMEs. And EXIM, of course, again, trying to support exports from the country. Like this we have, but I think as we evolve, as we move forward, there could be more niche banks of different segments, specializing both products, regions, and including population, so that they'll have more confidence on the expertise available in the banks. And that way, it also leads to, it also leads to a lot of innovation and also technology improvement. So that is what actually I have in mind when I mentioned niche banks.
Oh, I think you are absolutely right, sir. Part of this has been done in the past by cooperative banks, which of course are being strengthened, needs to be further. Similarly, on the regional rural banks, they all are focused on geographies or communities or areas. So I think that should be strengthened. Sir, one last question from my side. This theme of the conclave is fragmentation of the world in trade and in security, diplomatic relationships. All of this has caused a lot of uncertainty. Now, while India has been a good spot, we have been able to face up to many of these challenges so far. But how do you think the Indian financial sector should be facing this situation, which is continuing to be very volatile and uncertain?
I think all of you, yes, the world has been uncertain. I think in the recent times, I think last 4 or 5 years, ever since the COVID happened, the world has been seeing headwinds, uncertainty, and the no future guidance, long-term guidance. Now, therefore, one thing I think we should do as a banking community is we have to step up our risk management capacity and ability and also our practices. And then the capital planning should actually account for this, the uncertainty. And also the growth capital, we need to have adequate size and buffer of growth capital to meet the uncertainties. Because the financial systems generally collapse when, in fact, any country or the world, only when the banks collapse. So it is important banks that banks are not collapsed. So therefore, you need growth capital, you need a buffer capital, and you need a risk systems, good systems, and then also ensure our credit practices are very robust and reviewed regularly, because the firms may produce for local consumption, may also export. But unless we look at their market, unlike in the past, the banks used to lend based on whatever criteria, the same credit due diligence. And then we never used to really check it's a diversion, misutilization, or fraud. But nowadays we have our own systems which will alert the banks about the diversion of funds or misutilization or content. Similarly, I think because of given the uncertainty, we need to develop technology, and you need to develop, I think, more AI products so that we are always one step ahead of the crisis, so that we will be able to prevent. And even if it hits other sectors, the banking community is able to rescue that. Ultimately, the banking community has to rescue any crisis that is happening.
No, I think that you brought two very important points, sir. One, the nature of capital as a risk-absorbing buffer, not only growth part, so that banks need to be adequately capitalized. And of course, the second is how do banks are able to weather the crises and uncertainties better. Now, in this, while underwriting quality surely has improved across the system quite a bit, but the follow-up part where banks are able to absorb these signals and global signals and supply chains, etc., into the models, that obviously needs some more work. So I think that's a very important point. On that note, sir, I'll open up it for questions from the audience. Please ask questions briefly, and we'll request Secretary Sir to answer. Go ahead, Mr. Salunke.
Good evening, Nagaraju Sahab. This is Chandrakant Salunke, President, SME Chamber of India. I'm thankful to you. You have mentioned 10 times about the MSME and SME sector. I had seen the last 15 years of the first secretary was focusing more on MSME credit flow. Sir, you know, the target given by you, all the banks, still we are not seeing the target achieved by the banks. And the Honorable Prime Minister and the Commerce Minister, Finance Minister are insisting to enhance the manufacturing activity tier 2, tier 3 cities. And especially those industries, those enterprises are facing problem to get funding on time. And rather, to setting up the manufacturing units. What is the new concepts, your initiatives, and also the, particularly for enhancing the credit flow towards MSME sector and startups, those are encouraged by the government to set up manufacturing units because most of the startups are coming in the service industry. How we can take forward your vision and bankers' vision, because today morning I heard you at Gatekeepers meeting, and now we are ending day with your speech, particularly highlighting the MSME sector. So I want to hear from you, what is your strategic plan to enhance the manufacturing activity by providing more credit flow and to achieve the target growth, particularly for marching towards Viksit Bharat. Thank you.
Chandrakant-ji, when you know that afternoon I'm going to finish be the last speaker of the evening, you should have actually absented yourself. You are beginning your day and ending your day with me. But on a serious note, see, you are right, the entire banking community, the DFS, the government, the Honorable Finance Minister and the Prime Minister, we all want to provide more credit to the MSMEs. And on this, there is no second thought at all. Now, yes, is it, are we happy whatever growth is there? In fact, compared to the previous year, our total offtake on MSME front is higher. I think that nobody can dispute. As SBI MD has mentioned earlier, our growth in the MSME sector is looking almost 13.5, something like that. In fact, some of the banks, PSB banks, achieved almost 19% something. The SBI itself, I have mentioned, through digital footprint-based lending system, they lent more than 50,000 crores. There is the highest ever they did. In fact, now, are we happy? No. But is it the right way? Are we moving in the right direction? Yes. I actually feel most of my PSB banks are moving in the right direction to provide more credit to the MSME sectors. All of them have launched digital products and providing nimble-footed decisions in giving to the MSMEs. And now, why do we need to that? I think all of you know. Despite, in fact, we have also taken, recently we reviewed the UK Senate Sahab committee recommendations. How many recommendations we have fulfilled, how many are pending, how many are progressing. And then we find that some need is there. So we will be filling that need also this year for the MSME sector. See, my sense is, given the size, diversity, geographical diversity, and the diversity of products and of the MSME sector, at no point of time one can feel confident that we have achieved all the goals for the MSME sector. Because the MSME sector will keep on evolving, transforming, and becoming different things. So our challenges will always remain. How do we ensure, since it is so dynamic, as the time changes, the policies of both the government as well as the banks and the public sector institutions should be tailored to meet the changing demands and needs of MSMEs. Then only we'll be able to meet the goals of Viksit Bharat 2047.
I think, sir, you brought a very important point. The MSMEs is not a very varied segment. It's not one type of segment. And the micro, which is about 95%, constantly needs support, and they will continue to come. It's an entrepreneurship development which will happen from micro to small to medium and all. So it's going to be a continuous journey. It's not an end or destination in itself. So I think, and the growth of 15, 17% on average and 19% in few cases, plus trades and all are doing very, very well. So I think we are getting there. It will take some time, but the journey is clear. Any other questions from the audience? Sir, I have one more question, sir, by the time the audience makes up its mind. This is, prior to your session, SEBI chair was addressing us and taking questions. And one of the questions which came up was that while equity has shown very good growth, there are risks to that as well, because equity alone cannot be an asset class. And therefore, for a household, how do they balance between equity, debt, pension? Like you mentioned, you stressed upon pension and increasing the pension. It is not only the Atal pension level, but beyond that as well. Similarly, on the other mutual fund side. So how do we balance on all of these? And he mentioned some forum which is there for various regulators and the government, which should be doing more awareness campaigns. Sir, your thoughts on this subject to have a balanced financial development for people, individuals?
I think all of us require a balanced risk prevention strategies for the rainy day. Especially, of course, I believe middle class, especially the financial sector community, since they are experts, will be balancing, we must have taken steps for that. The segment of population which has no savings, that is one, of course, there is no savings, then there is no balancing of assets also for them, or risk also. Only people like you and me, who are middle class, upper middle class, or low middle class, who have assets for the superannuation or old age, I think we need to balance that. We have, of course, for the interregulatory coordination, we have two forums. I think many of you know. One is FSDC, Financial Sector Development Council. That's all the regulators plus these two secretaries. We are all members. And then we started the pension fund regulatory coordination. That also, because it was my surprise. In fact, it's completely shocked to know that there are different systems of pension systems in the country for the government employees and the private sector, different, and they are administered through different set of rules, regulations, and authorities. Now, at least we tried to identify the problem now. We are trying to bring in some uniformity of regulations and uniformity so that transparency into the working and the investment, so that the subscribers or the participants will have a handle on their finances. Now, which is, I think, the debt equity, I don't to get into this thing. Now, all kinds of instruments are available for balancing the risk. Ultimately, the goal should be, what is the minimum amount you require per month? I think that's the standard common sense after you hang your boots. And out of that, how much risk you are going to take, and then based on that, I think we have to keep our assets into different classes, both equity and debt, and then other newer and innovative instruments are now coming to the market. I think they are not a bad idea to take a look at also, but not so much, but a little, so that your exposure is exposure to risk is limited, and the returns are actually sustainable.
I think sir, that's a really important point, because in India, financial planning seems to be meaning only wealth planning. Below that, the entire segment of a lot of people who may not have a lot of surplus, but still need a lot of good advice. I think that is one big area. So while we are trying to address that in a limited manner, but I think it will need an industry-wide approach and effort in education and offering the products. So if any other questions are there from the audience, happy to take. There are a lot of people sitting behind the cameras. I can't see. If anybody has, please raise your hands. So I think, sir, people are really...
They must be waiting for you when SBI data. So you very fast.
No, sir, we are not forcing anybody, and it's been a long day. There are continuous sessions. But I want to thank you for your time and sparing the time, and also answering all questions as usual in a very candid and a forthright manner, which is your style. So thank you for that, sir. It's always a pleasure listening to you and learning from you. Thank you so much, sir, for your time.
Thank you.
Sir.
Thank you. Thank you very much.
Thank you so much. Thank you. Thanks a lot, DFS Secretary. A huge round of applause for the DFS Secretary once again, ladies and gentlemen. It was a wonderful, as also insightful, to listen to the thoughts that will go a long way in shaping our future. Now, to formally conclude day one's proceedings that benefited us all through fleeting footprints of time, I invite Srimati Saloni Narayan, Deputy Managing Director Finance at State Bank of India, for the vote of thanks. Huge round of applause for Saloni Narayan.
Good evening, everyone. Respected Chairman, MDs, Directors on the Board of SBI, all the esteemed guests present here, my colleagues and friends from the bank. I have been given the privilege of proposing the vote of thanks and also doing the wrap-up for day one. I'll try to be as concise as possible. However, it is very difficult to capture the pearls of wisdom that actually came from each and every panelist. So this brings us to the end of day one proceedings, and it is my pleasure to recap today's proceedings. It was an engaging day with Honorable Finance Minister and Minister of Corporate Affairs, Srimati Sitaraman, taking the time out for the 12th edition of SBI Conclave and sharing pearls of wisdom with us. The diverse panelists in CEO panel shared their concerns and solutions on how to achieve self-reliance. SEBI Chairman touched upon the role of capital markets for achieving self-reliance. Let me share a few takeaways of today's discussions, starting with the inaugural address of Honorable Minister of Finance, Srimati Sitaraman. Self-reliance along 5 dimensions. Can you put out the slide, please? Economic, social, technological, strategic, and environmental. Self-reliance, not protectionist, but includes active cooperation, continuous reforms and adaptation, homegrown solutions that work for India and the world, crucial role of banks in economic self-reliance through financial inclusion. She urged the banks not to lose the human touch in service delivery and suggested language efficiency-based performance rating in banks. Coming to the next CEO panel, which was a very high-profile panel, there was unanimity on positive outlook for the India story. The key concerns include supply chain vulnerability, cyber security, market concentration, navigating uncharted waters through strategic partnerships, technology solutions in production facility, digital solutions in supply chain, continuous process policy reforms and learnings. These were some of the suggestions made by the CEO panel. Then was the keynote address by SEBI Chairman, Shri Tuhin Kant Pandey. The crucial role of capital markets in self-reliance, changing paradigm of household investments, democratization of finance and wealth creation in India, need efficient and deeper markets through ease of doing business, use of technology for surveillance to ensure investor protection, financial education for inclusive retail participation. And finally, the special address by Shri Nagaraju sir, Secretary DFS. He elaborated on the building blocks of the vision of Viksit Bharat 2047, stressed the need for nominal growth in double digits for achieving Viksit Bharat 2047. Digital Bharat and digital banking plays a key role. He highlighted the credit penetration to agriculture MSME through financial inclusion. IBC has played a pivotal role in resolution of bad assets. He lauded the performance of public sector banks in all areas, especially strengthening of the balance sheet of the banks. He exhorted the banks to focus on rendering excellent customer service. He also exhorted the insurance companies to improve their insurance penetration. These were some of the very broad takeaways from the discussions that we had. With this, we come to the end of day 1 of the 12th SBI Banking and Economics Conclave. We shall reassemble tomorrow at 9:30 a.m. for day 2. Let me propose the vote of thanks for day 1. I extend my heartfelt thanks to Honorable Finance Minister and Minister of Corporate Affairs, Srimati Nirmala Sitharaman, for taking the time out and setting the context for a day-long thought-provoking sessions. I thank SEBI Chairman Shri Tuhin Kant Pandey for his insightful address and very elaborate Q&A session, which would have addressed the questions from the audience very comprehensively. My sincere thanks to Secretary DFS Shri M. Nagaraju for addressing the gathering through VC despite his extremely busy schedule. I extend my gratitude to the esteemed panelists for the CEO panel, Dr. Anish Shah, Dr. Praveer Sinha, Shri R. Dinesh, Shri Vikas Kaushal, Ms. Dipali Goenka, and Ms. Upasana Taku. My special thanks to our esteemed chairman, Shri C.S. Sethi, for his guidance and encouragement, without which this event would not have been possible. I thank the MDs and all the directors on the board of SBI. I warmly invite you all to join us for dinner, followed by a breathtaking musical night, which is to be followed and will be led by Shri Shankar Mahadevan and the team. Good night and enjoy the evening. Thank you so much.
Thank you so much. I would now ask everybody, I invite everybody to join us for dinner outside. And just for the information of everyone, the musical evening by Shankar Mahadevan will start exactly sharp at 8:30 p.m. I hope to see you all tomorrow at 9:30 a.m. Good night and thank you.